First up is invocation. Pastor Tennant, would you all please rise?
Good morning. Let us pray. Father, today I want to remind your people here. You said you have predestined people, all people, to come to know you through Jesus Christ. Father, you're the one that gives life and eternal life through our Savior Jesus. And I want to thank you today that you have made that way. You have shown the way of the way to the cross, the way to heaven through our Savior Jesus Christ. Not by good works, not by what we do or what we don't do, but by the gift of Jesus Christ. And I thank you today for that grace and that mercy today that has been poured out. And I speak it in abundance here over this meeting through these people's hearts, that they, if they don't know, that they will know and have the confidence of a Savior called Jesus. And I thank you for it, and I speak it very clear and loud today in Jesus' name. Amen.
Amen. Thank you, Pastor. Pledge of allegiance.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all.
Okay, we'll go through a roll call on our computer.
I do have everyone present with Joe Baraka remote online, and I do have Jordan Spacek excused unless he's online. Yeah.
Okay.
Okay.
Thank you, Meredith. Communication and announcements. Does anybody on the board have any communications they'd like to share? Ms. Hodak?
I do. I have one of those feel-good communications, and I think we always need to hear those. I was a constituent of this person at one time who sat on this board, and now she is my constituent, Nancy Viscocho. She sat down with me when we were up in Minocqua, and we had a nice discussion. She wanted it to be known that she is very, very pleased with our highway commissioner, Roger Petrick. She said he has worked with them in the Dover project that is coming up, has come to their house, has sat down with them and discussed issues that she had concerning what was going to happen up in that area because they're going to be rerouting a little bit. And she really was emphatic about how he worked so well with them. And she wanted, and I texted her this morning asking if I could use her name. She said, most definitely. So, in a world of where there's so many negatives going on all the time, it's really nice to hear that our businesses are being dealt with well, and good for Roger Petrick to get that nice little kudo there. So thank you.
Yeah, it's good to hear. Anybody else on the board? Okay, moving on. Public comments. Only one person signed up. Jenny Strobel. 2 minutes, non-agenda, 3 minutes for agenda.
I missed the last month's meeting, so I missed the public comment, but I saw it online the other night. I sincerely hope that not any of you share the mistaken belief that was erroneously expressed last month's public comment. There is nowhere in the Constitution that in any way calls for the separation of church and state. On the contrary, the Constitution is based on the Christian Bible. Government needs to stay out of the churches, not the other way around, and that's what the First Amendment is for. If you believe that separation of church and state is in the Constitution, you are not qualified to be on this board. You took an oath to defend the Constitution. How can you defend it if you don't know it? I really feel that such a statement, even in public comment, should have been discredited at that meeting despite the policy, not a law or even an ordinance, that suggested that you don't react in any way to public comments. I do feel it should be done sparingly, but there are some cases when it is absolutely necessary to be answered immediately. And in the case of someone using the Constitution to promote a lie, is a time to throw out that policy. That policy was suggested by a former county board chair. I remember when it happened. Your oath trumps that policy. How much effort should be expended to find a local clergy when we have a wonderful pastor willing to come to the aid of the county? Pastor Tennant has been doing a great job delivering the invocation. It's unfortunate that a former teacher would make such a comment, but thanks to the Constitution, she has a right to do it. And thanks to God, she has free will. I've prayed for her often, and that's no lie.
Thank you. Anybody online, if you would like to make a public comment, *6. Apparently nobody online wants to comment, so we'll move on. Presentations, employee recognition, Laura Paulskill.
Good morning.
Morning.
Oh, there we are. Okay, we have a number of employees to recognize this month. These are going to be our September and October anniversaries. So I would like to invite any of the employees who are with us today to stand up as their group is called. So celebrating 1 year, we have Caitlin Kirchmeyer, who is a social worker in behavioral health. Matt Hibbard, highway operator. Dawn Schmutzer, who's our child support specialist. And Rhonda Murray Makowski, who is our social worker in aging and disability. Moving on to our 5-year recognitions, we have Cheyenne Litvinoff, who is our program coordinator and community outreach in human services. We've got Sean Peterson, deputy sheriff, James Wazinski, who is a corrections officer and civilian dispatcher, and Aaron Hickerson, a deputy sheriff. At 10 years, we've got Melissa Robb, IT assistant. I think none of this stuff would be here if she weren't here helping us with it. So thanks for that. And then moving on to our 25-year celebration, we have Seth Dobler, who's a sheriff's lieutenant. So let's give them all a big round of applause. Thank you.
Thank you, Laura. Thank you all for your sticking with the county. Next up, presentation number 2. We have Representative Sheehan from Baker Tilly LLP for the 2024 audit presentation.
Good morning.
Morning.
Oh, thank you. Good morning. All right. As introduced, I'm Sheehan Hediger from Baker Tilly. I am the partner principal who oversees the county's annual audit, which we are just putting the final touches on here this week. Today I will cover, if you want to go to the next slide.
Just if I may, you should have all got a copy of this in your packets. If you didn't, let us know.
Looks like it. Okay. So we do have 3 reports that will be issued. They are in final draft form right now. So if you did get those drafts, that is what will be printed, published. Just waiting on the final items here to sign the reports. We have the audited financial statements, the report on federal and state awards, and then the reporting and insights letter. I'll cover all 3 of those briefly here today. And if there are questions as I'm going, feel free to shout them out or wait till the end and I can answer anything then. All right, so starting out with the independent auditor's report. So this is the 3 or so pages at the beginning of the financial statements that really is the part that we as the auditors are issuing. The rest of the financial statement document is really that of the county and prepared by management. We start out with the opinion. This looks probably identical to last year's. We are planning to issue an unmodified opinion, also known as a clean opinion. So that is the highest level that the county can receive. And what that means is the financial statements are presented fairly in accordance with the accounting principles generally accepted in the US. As I mentioned, management's responsibility is to prepare and have fair presentation of those financial statements, and to design and implement internal controls over the financial reporting, and then evaluating if there are any conditions or events that would cause the county to not continue as a going concern. Then there's a section for auditor's responsibility. So we as your auditors obtain a reasonable assurance that those statements are free from material misstatement. I like to say reasonable is a high level of assurance. It's not absolute. We are sampling transactions. We're using materiality thresholds, not looking at everything that goes in and out of the county. A misstatement is considered material if it would influence the judgment of a reasonable user. So there are quantitative and qualitative thresholds to consider. In performing our audit, we exercise our professional judgment, maintain our professional skepticism. We design and perform our procedures based on risk assessments. We obtain an understanding of those internal controls that management is to design and implement, and then evaluate any accounting policies or estimates used by management in coming up with some of the numbers. And then ultimately also conclude if we feel there's anything that rises to a level of putting the county at risk to continue as a going concern. So that's all very, like I said, very similar to last year, and the standard language that we use. I will now cover some of the financial highlights, some of the numbers that are within those draft financial statements. If you haven't already, when you do receive the final report, I would recommend reading the management's discussion and analysis, which is towards the front of the financials. If nothing else, if you don't understand all the words and numbers within the report, that section is a summary prepared by management, gives you kind of an overview of what happened during the year, why some changes may have happened, and then some future outlook. But starting with the general fund balance, which is one of the most important metrics within your financials. Having a healthy fund balance allows for flexibility in unplanned expenditures, any budgetary needs that may come up throughout the year, and then allows for flexibility in your cash flows if revenues don't match when an expense happens. So that fund balance can be broken down into these 5 categories. They are listed in order of liquidity and restrictions. So the top being the least liquid or most restricted amounts, down to the unassigned being the available. Page 35 of the financials does have the details of each of these numbers, but just to give a high level, that non-spendable fund balance, so those that are in a non-spendable, non-cash form, that just over $1 million is made up of prepaids, inventories, delinquent taxes that, uncertain if they will be paid. That makes up majority of that balance. The restricted amounts are those that are, set aside for certain purposes by various outside entities or enabling legislation. The committed balance is that which you as the board have set aside for specific purposes. You've done formal resolution to commit those funds for capital projects. And then the assigned is also that which the county designates, but it's not as not as rigid of a designation. Has maybe a little more flexibility in the use, but that is 95,000 roughly are items for the 2025 budget, and then veterans services. The unrestricted then, as I mentioned, is the residual, that which is available for regular operations and future needs. So overall, general fund balance at the end of 2024 was just over 6 million. That is a decrease of about 911,000 from the prior year, which we'll look at here in a couple slides of the change to the fund balance. This slide then shows it's kind of a measure of adequacy of your fund balance. So we compare those assigned and unassigned fund balance amounts. So those which are more available to be used in comparison to the general fund expenditures for 2024, just to get an idea of how much you have built up in reserves. So as of 12/31/24, you have about 30.7% fund balance available to cover future expenses. That equates to about 3 to 4 months of reserves on hand if you were to get no revenue in the door, January 1. The graph there then just shows a 5-year trend. The red line being the Government Finance Officers Association, the GFOA. They recommend a minimum of 2 months on hand. So, the 3 to 4 months that the county is holding is an adequate balance to have. You also have other funds with reserves for specific purposes too. So it's good to know that this is not the only money operating the county. All right. Next then, as I mentioned, we'll talk about what led to the ending fund balance amount. So the revenues and expenses during the year were your income statement. As I mentioned, the general fund did experience a decrease of 911,000 compared to a budgeted amount or a planned balance of a break even. Things happen. A budget is your best estimate at the start of the year. Some of the things that led to both the overage of revenues and expenditures in the year. On the revenue side, while you did perform better than budget, one area that revenue was a decrease from your budget was the stumpage revenue. So that was about $480,000 less than planned. On the flip side, investment income, the markets had another solid year. So that was about $430,000 over budget. On the expense side then, public safety expenditures ended up over budget, about $629,000. Much of that being wages and benefits in the sheriff and jail areas. And again, that's over what your planned budget was at the start of the year. And then there were some capital outlay items for the year. Buildings and grounds updates, parking lots that did not have budgeted amounts, but expenses were incurred. There's timing differences with how, and this fund balance decrease is a 1-day thing. This is on 12/31. This is what it was. You collect your tax revenues into 2025 that offsets these losses. So nothing there that's concerning as the auditors, just going through what these numbers all mean. On the cash and investments, so total cash for the county was about 10.9 million at the end of 24. The unrestricted balance, so that's all county funds. Highway saw most of the increase that you see from 23 to 24. But again, that's a timing difference of collections of previous years' accounts receivable, timing of paying payables. So a steady increase there, always good to see. The custodial funds of 350,000. Those are monies that are held for others. That's not county money. So we have to show it on the financials, but it's just pass-through dollars that run through the county. So I mentioned a few of the other funds, the special revenue funds of the county, the human services and special grants funds. Looking at their fund balances for the year, human services did see a $377,000 decrease from 23 to 24. On the special grants fund side, see that increase that happened from 23 to 24. There was $111,000 of opioid settlement income and no expenditures with that yet. And then about another $50,000 of investment income that led to those increases.
I got a question.
Yep.
What about that substance abuse grant? Do we get money on that? Because that would have been right there, right?
That would be the opioid money you're
It
talking
is
about.
opioid money. Okay.
And we're up to like 220 now, so.
Yeah, and that's, you know, an 18-year settlement, so you'll continue to receive funds for quite some time on that. And then the debt service fund was, you know, nearly a break even, $960 difference. That is as expected as you levy for the debt service payments that are coming up in the year.
I have a question.
Sure.
On that schedule, the columns, I'm trying to understand. It looks like each section is kind of separate. You got 24, 23, 22, and I assume that's all end of year for the
Yeah.
year. But what's the one on top? It says amended budget. What year is that?
So that is the first column on that top section is your 2024 actual results.
Yeah,
The budget is what you budgeted for
that's the 2024.
the 2024 budget. Yep.
Okay.
And then we have 2023 there just as a reference so
Okay,
you
'cause
can
you- okay.
compare.
Okay, you lose 22 up on top. Okay,
Yeah,
I just
yep.
wanted to make sure I understood it. Thank you.
Yep. All right, then the next page is looking at the highway fund. Just a few metrics here. You can see the working capital. So your current assets minus your current liabilities and unearned tax revenues is a deficit of just over $1 million. And a lot of that is the short-term debt that's sitting on the balance sheet, greater than the cash balances. Again, that's timing of things as you're borrowing and making payments out. The loss before transfers of 4.1 million. Your operating costs are exceeding your operating revenues and taxes. But then after that line of that loss, you do have transfers that happen from the debt service fund or the capital projects into highway to fund those expenses. So there was a $3.5 million of debt funds and capital projects funds transferred into highway during 2024. And then the net position categories. So the investment in capital assets, which is all of your highway equipment and capital items, less any outstanding debt. So you have about $4.6 million invested in assets at the end of the year. And then the unrestricted is a deficit this year. There was a $644,000 loss in the highway fund, leading to that unrestricted deficit. All right. We have one more numbers metric to look at. So looking at some of the debt service for the county. At the end of 2024, you did have outstanding general obligation debt of $3,190,000. There was $800,000 of new general obligation debt issued in 2024, and then principal payments were made on other outstanding debt as scheduled. Comparing that to the debt capacity, so the debt capacity is calculated as 5% of the county's equalized value. So that is 115 million at the end of the year. And as you can see from the 3-year trend, that continues to rise, meaning you have a rising tax base. So at the end of 24, the county has used, 2.8% of your debt capacity. So This shows very responsible borrowing and plenty of capacity if you needed to borrow for any significant projects. And then another metric is looking at your total debt service, so your principal and interest that you pay annually in comparison to other non-capital expenses. So the county for 2024 had about 1.6% of your expense is going towards debt service. And you can see it from the graph for the last 5 years, that's been very consistently low, which is good. That red recommended minimum is from the bonding agencies. They like to see no more than 20% of your expenses being debt service. So again, this is a really great metric for the county. And if you were ever going out for rated bonds, that would be one measure they would look at. Yes.
So in here, we do have a $15 million bond that we co-signed. That doesn't affect this sheet at all? Our bug tussle
The bug
wireless?
tussle, no, that is not part of the county's debt. Because of the way that agreement is
structured.
all arranged.
Okay.
That is debt of, remind me what county?
Brown.
Con Mohawk?
Fond du Lac.
Fond du Lac.
Yes, yes, that is their debt to take on. And then there is some disclosure within the financials about that agreement this
Okay,
year.
good, thank you.
Mhm. All right. Moving then to the second report that I mentioned, the report on federal and state awards. So this is where we look at the grant funds expended by the county for the year. Within that report is the schedule of expenditures and federal awards. Go to the next slide. So total federal expenditures for the year, just under 2.2 million. Of those, we tested 4 programs this year: the medical assistance program, the ARPA funds, or your state and local fiscal recovery funds, the local assistance and tribal consistency fund, and then the social services block grant. We are required to test over 40% of the county's federal expenditures. So we actually got about 48% coverage this year. Those ARPA funds are designated as high risk by the federal government. So that's one that we had to test each year, that you've had expenses under that program. And then the others get selected through a risk assessment process. On the state award side, there was a total of 2.7, 2.8 million of state awards. 53% of that comes from Department of Health Services and Department of Children and Families. So it really does hone in on one of your departments here that gets selected for testing every year. So we did test the basic county allocation program. And then this year, the snowmobile trail aids program was also tested. So, across 6 programs, we dealt with several county personnel through that. There are 2 opinions within the single audit or the federal and state awards report. The first being looking at internal controls and compliance over financial reporting. So this focuses more on the financial statement process, not so much the awards. This report will look just like last year. There is a material weakness in internal control over financial reporting, and that is because we as the auditors prepare the financial statements. Management still takes responsibility, but we put them together for you. And then there's a significant deficiency over payroll transactions, which in 2025 now, I think has been cleared up from what we've discussed through the audit process. So I don't foresee that being a repeat item going forward, but it is something that we'll test next year.
Question. What was the issue with the payroll?
It is a segregation of duties. So it's a matter of somebody having access and ability to run payroll and make changes to, wage rates or add employees. But now procedures have been put in place to do a more detective look after the fact of making sure any changes that were made in the payroll system were appropriate and were properly approved.
Didn't we implement that already early last year?
Yeah,
It
so-
wouldn't show up in this audit yet.
The way that works is, so this is 2 years ago already. So this is 2024. And if you don't implement them before January 1st, it's a significant issue during a year. So I would say we probably started mid 2024 with different segregation of duties. And we've always had this material weakness. We've had
But
lack
this
of.
one's a significant deficiency,
the-
so it's a lower
Yeah.
grade.
Sorry, we've always
This
had
one.
this issue of segregation of duties. It's not a material weak, but like we just haven't had enough employees to segregate. Now with the new systems we put in place with Time Clock Plus, there's one other one we use, but now everybody doesn't have access to everything. We turn that off probably mid 2024. So all of 2025 will be covered. Again, this has been the same thing for years, but we slowly either have an employee like now with, we use Register of Deeds for a while to have Sarah look at employee files. So if a new employee started, in the past, it'd be Jennifer adding stuff, Robin adding stuff, and those are the two that are doing payroll. Well, they did everything. Now we say, okay, Sarah, you need to sign off. We changed this already to different, but Sarah would sign off saying, I looked in the system, the wage is right, this is right, that's right. Once a month, I have to run a report because I have no access to payroll. I run this report and I go, okay, here was all the changes. I have to pick 3 to 5 of them. I go in and go, okay, this person's making this much. Why did they change on that date? It was their anniversary. I sign that or make a note, and then we keep a file. So that's the new process we put in place, but it doesn't go away for almost 2 years.
Yeah, and again, this doesn't mean that we found anything inappropriate. It was a matter of looking at that control structure and notifying you as the board so that you're aware of these areas that could be improved. All right, but we did not find any instances of non-compliance then in that one. The second opinion then is the report on compliance for those major federal and state programs that we tested. We look both at compliance and controls over that compliance. And for 2024, we have no findings noted. So again, looking at 6 programs across various departments of the county, that is a really great result. We look at a myriad of things, including, the actual expenses that are incurred, but also is the reporting proper? If there's procurement process that needs to be followed, just managing the cash, timing of making payments and such. So again, there's a lot of things to look at within that. So kudos to all of those departments for the good work they did on those grants. Again, this does say results are in draft form and subject to change, but as I mentioned, we just late yesterday afternoon finalized everything. So we don't foresee anything changing with those results. All right, then the final report is the reporting and insights letter. So this is our summary of the audit results and procedures that goes to management and the board. This is really a letter for your reference. It will look very similar to previous years, very routine points in here. Within the required communications, we do the 2-way communication. So that is going over the nature, scope, and timing of the next audit. So if you read through that and have any questions or concerns regarding 2025, feel free to reach out to us anytime. And then we go over the 2024 audit approach and results, looking, explaining what we concluded were significant estimates in the financial statements, that being WRS related calculations and depreciation over your fixed assets. If we had any difficulties, disagreements, or consultations outside of our audit team throughout the audit process, we would report that to you as the board. Always happy to report that we did not have any of those, difficulties or disagreements with management. Nothing out of the ordinary with the audit that we needed to consult on. Not listed here, but there was one new auditing or accounting standard, GASB 101, that was effective for 2024. That was over compensated absences and just looking at reporting of those. It had an immaterial impact on the county, so nothing that significantly needed to change there. And then just to give a heads up on some upcoming GASB standards, we have one for 2025, two for 2026. We'll continue to work with Nick and Carrie and making sure that the county is prepared for those implementations, and any applicability or changes needed, we'll work with them on that. So ultimately, just thank you, a big thank you to the county, Nick, Carrie, all of the other staff, got highway, human services, conservation, just a lot of departments that we work with annually. So everybody's always very cooperative, very prepared for the requests we send up front, and then responsive to the many months of questions that we have after the fact too. So very much appreciate it, and happy to work with the county. So, thank you.
I have one quick question. We've got, said 4 months reserve cash.
Yeah.
And typically other counties have on average 2 months. Should we spend the 2 months, or what's your opinion?
No, that's not an average of other counties. That is a
Guideline.
a guideline, yes.
Okay,
that the,
guideline. I misspoke. You're
yes,
correct.
and that is a minimum. So if you're sitting at the minimum and you dip below, that doesn't look so good anymore. So I would,
Leave it
3
where
to
it's
4
at.
months is it's not a cushion that you need to get rid of.
Because as a taxpayer, taxes keep going up typically, not that we're going to raise taxes this year, at least the county is.
Yeah.
But
Yeah, I mean, you're not
we're
sitting on a
cash
year's
that-
worth of
and
reserves.
we're still raising taxes. We've got to explain why.
Yeah. Well, and when you have a year like 2024 where your fund balance dropped, 900,000, you have to also prepare for those hills and valleys that
Right.
will happen over time.
Go ahead.
I had two quick things. So usually you guys issue books, like
Yeah.
physical books. This year we're doing digital. We do have to get a couple physical books because I think we have to, one on record, one to the bank. There's some weird ones, but just so everyone's aware, we're not doing the physical books. We can print the digital copy and staple it or whatever if you want a physical copy, but we've eliminated the book portion of it. And then a lot of the discussion today is, we got to remember it's 2024. So when we were looking at our budget in 2025, we've already corrected for a lot of the fiscal issues. Like we talked about sheriff's department wages and benefits. That was a big area of overage. In 2025, we made some big adjustments to combat that. Now, looking at 2025, based on our estimates, we're going to be over again, but we wouldn't be over all of 24 and 25's amount. So this is all good stuff because it's 2024. It's our report card of what we're doing, but we've already made some of the adjustments. So when we're looking at today's budget, we don't want to double change stuff we've made that change in 2025, which we can talk about. Those are my 2 follow-ups.
Yeah. I have a couple of questions, and one is pretty much directed at you, Sheehan. You said that if you came across any, you don't audit for internal control deficiencies, right? That's kind of like fraud, but if you came across something, obviously with that payroll discussion we had, you would bring it up.
Yes.
If we wanted you to look at internal control, I would imagine that would be in addition to the audit.
Yeah, that would be a separate engagement.
Do you have any idea what that would require? Like typically kind of hours you would spend? A ballpark?
We would probably want to narrow the scope. So if you were looking, is there a certain department that you want to look at controls over? Is there a certain transaction like payroll transactions that you
Yeah.
want to look at? So it really could vary. I mean, we could do a 500-hour engagement, or we could, spend 10
more.
hours looking over something. So
And then the other question, and maybe Nick's going to answer it, this chart with the
is that the
unreserved, unassigned, yeah, that it really went up a lot. From
yes.
where it was trending down and then it skyrocketed. Do you recall what caused that?
Our debt.
There was a transfer. Okay, there was debt and capital projects funds It was a year timing difference.
It was several years timing difference.
Yeah.
So we weren't transferring money out of the debt service to cover the debt we were paying. So debt service had,
Other way.
other way.
So
into the
you're,
debt
what you're
service.
saying is if we would have done this back in 2020, this graph would have looked a lot different.
Correct. It actually was several years of the capital improvement projects and the debt that we borrowed for those projects. The debt didn't go into the capital improvement project fund and it was still sitting in debt. So
It was
this general
subtracting
fund,
it.
so that's why, because the debt is a separate fund and the capital projects went into the general fund. So
And
we
if-
had to make that transfer.
If you look at the next page, there was the debt service fund
Yeah.
showing the 3 years of fund balance.
Yeah.
In 2022, that fund balance was about 2.6 million. And then it dropped
Ah.
because that was the year then you made the transfer to get those funds,
Right.
the revenues to match
It
where the
wasn't like
expenses
one
were
big
happening.
project either. It was all these little ones that we do, like 300 here, 400. It was just adding up over the years.
2019 to that year.
Okay. So prior to 2020, would that number have been up and then it just came down because of this issue when we started doing things differently?
Correct.
Okay, good. Well, one thing, and a point of humor, I lost the election in 2022 for my district. Maybe it was because of that number. I don't know.
I can't weigh in on
I
that.
couldn't figure out why I lost, but maybe that's what it was. I don't know.
Somebody turn his mic on.
But yes, my contact information is at the end of this presentation. It is also in the first page of that reporting and insights letter. So again, if there's anything that you want to discuss further or bring to our attention for the audit, we are available.
And just going back the other way, we enjoy working with you and your team. They're easy to communicate with. They're great to work with. They're very educational. I think that was a big reason we've always stuck with Baker Tilly is when we started, we had a lot of journal entries, we didn't know what needed to be done. And through your team and our team, a lot of education. And so now there's less work on your end to get to the final product. So thank you.
Thank you.
Yes, thank you very much, and
right.
look forward to working with you in the future. Thank you to our team. Sounds like they're doing a very good job.
Nice job.
Okay, moving on. Approval of the minutes from the August 19th, 2025 meeting. Looking for a motion to approve. Somebody make a motion. We're voting already, but we didn't really have a motion yet, as far as I can tell.
I'll make that motion.
Starting it over.
Motion by Hodek, second by Drobnik. He's got it on the computer now. Okay, any discussion regarding the minutes? Hearing none, now we will vote. Looks like all the votes are in. Those online. Joel,
Yes.
Jordan,
Jordan wasn't sure if he'd be able to unmute. He was in a tractor cab, so. or
okay.
A
We'll
cab
go-
of some sort.
Just move on then.
We heard you, Jordan. Thank you.
Motion passes 13 yes, 0 no for the minutes.
Okay, moving on. Resolutions. Number 1 and number 2, both of these resolutions did not make it out of committee at their last meetings, so we're going to postpone them until our next meeting, most likely. Does anybody have any questions regarding them? Before we move on to number 3?
1 and 2.
1 and 2, correct. Okay, moving on. Number 3. Transfer to Capital Improvement Fund 2024. This came out of executive, whereas the Price County Board of Supervisors approved resolution 33-07 Capital Improvement Fund at a regular meeting held August 21st, 2007, and et cetera. Now therefore be it resolved that the greater amount of $280,199 plus $13,865 profit from personal property sale for a total of $294,064 be transferred from the general fund into the capital improvement fund for the year 2024. Nick, you wanna? We'll go ahead. Okay, motion by Barkstrom, second by Erickson. Discussion. Nick, you want to give us?
So this is
brief
a yearly transfer. We've been doing it as long as I can remember. We have a formula that you as a board came up with multiple years ago, that we've adjusted a little in the past. But what it does is says, okay, did you have a positive gain in your general fund, or are these other things higher positive, the difference? So there's a page connected that it does all the math for you and then decides which one has the greater amount, and that goes into the fund balance. We use that capital improvement fund for, we use it for the jail expansion. We used, that pays the interest. We do it for our dam projects. We've used it for airport projects. It's kind of the smaller, it's a way that we set aside money so we don't have to borrow to do capital projects. We kind of have a schedule of what we think would be spent over the years. So this is how it grows or how it stays the same. But this is a yearly resolution we do.
Any further discussion? Okay, hearing none, we'll go ahead and vote.
Baratka votes yes.
Spaces, yes.
We got both.
Thank you both. I have you both, yes.
Okay, all the votes are in.
Just need one more from Bob.
I can say something. I'm having a little trouble here because we say whereas blah, 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 blah resulted in a loss of this, an additional loss of that, and has been added, leaving a net profit of that. It changed from a loss to a profit in that paragraph. Is that right? It says we had a loss of 539 revenues, expenditures.
Yep.
Loss, and then when it gets over here, it's a profit.
No, it should be, yeah, net loss,
So then this isn't right.
which would provide then 50%.
Only if you have a profit.
Yeah, the other one, then this 280 comes from sales tax as provided of this other. So this is actually,
This is 50% of,
which would be that. Okay.
so the sales tax is 280.
But whereas the net income, no. Okay.
We use the sales tax this year.
Yeah, is what we end up using. So let me,
280, 199 plus 13,865, which is the
So the
sales.
sales tax is 280.
correct.
Okay, so this really should say a loss, right?
Yeah,
No, because the general fund had a net.
correct.
loss.
Yeah, no, it's correct, which is the net.
Well, if this is a loss and that's a loss, and these two numbers are added,
Right.
they don't change to a profit.
Can I see the?
Yeah, okay.
Where's the sheet? That's, thank you. Nope. not that.
I'm just confused on the language here.
Oh, we all are.
Okay, here we go. So, yes, that should say a net loss, yes.
So that whereas has,
Provide a 50%.
but you wouldn't have a
It wouldn't- yeah,
50%
correct,
because
which
that
would
whole
not
rest.
provide us- Right.
So do we need to amend this resolution before we approve it?
We could cross off, and yeah, say loss there on line
Yeah,
22, and then line 23, which would not provide a transfer.
okay, then I'm reading it
Yep.
correctly. Okay, so what do you want to do?
Well, we should correct it to make sure it's proper, but I'm not sure everybody understands how we're correcting or what.
Well,
we're
I was
doing.
having
So
trouble understanding it too.
I would suggest everyone change their vote back.
Or
And that
just
would clear the board.
revote.
And then we'll,
We need
Yeah,
to
well,
amend the
everybody
resolution.
hit the change your
but
vote
the
button.
motion
amend
needs,
the language in the resolution.
motion needs to be amended.
Yeah. Okay, so we'll go back to this resolution. And we're in discussion now. Now we need a motion to amend the resolution.
Canceling the vote.
Canceling the vote.
Okay, and you want a motion to amend, which I will make,
Yes.
to correct those numbers on that line item there, the whereas.
It's not changing the number. It's just changing the one word.
Correct. Well, it's changing
Well,
two
and-
words.
And you got to eliminate the rest of that sentence because you don't have
Right.
50% of anything anymore.
So we would on line 22, change the word profit towards the end of to loss. And then line 23, it would say
Would not.
we would not provide a transfer.
I would just cross off everything after 574, 957.
So everything, all the words and the numbers.
Right, line 23, you don't need after the amount.
Oh, yeah, that's true.
No,
Yeah,
just take that out.
period,
So you're just-
take out the
you're-
which, yeah, the whole.
You're showing the math that
But
the
leave an
general fund
and.
didn't
Right.
happen, which that's kind of what it do. It's just one line too much.
And the sales tax is 280, right? That's the sales tax number.
280, 199
I
plus
think you had it right
13,000.
with what you said there,
I
but,
did, but
because
just because-
50% of that is more than 280.
But on line 23, you'd leave that amount,
Yeah,
and then
I did.
280.
add the word and on there
Yeah.
to go to and whereas.
Thing was-
Yep.
What line was that? Did you have another?
23?
Yeah,
So-
23, just put a period right after the 574.
No, you need and.
Oh, yeah, I'm sorry. Yes, comma and. Yeah, and whereas, you're right.
Yep, to flow into whereas.
Where are you putting that?
Right
Line
after the dollar
23.
amount.
Yeah, that's-
Line 23,
You leave the,
the amount,
Some-
comma,
Okay,
and,
Yep, yep.
and whereas.
Carrie?
Yep.
Got
what
that.
what I think the verbiage was, Bob, in the old one, is it would say, so that was a loss, and instead you'd use
I
the
got,
profit from, because the 280,
Printed it.
199 is the
Well, that
sales
ends
tax.
because there's a loss of 570, so we use the sales tax, yeah, okay.
We haven't had a loss in a while in it.
No, we didn't.
Maybe I can share it. Okay.
Which you could have just wiped it right out. Instead of just putting a line through it.
Oh,
That's okay.
oh, delete it.
Yeah,
Okay.
Just delete it.
It, this way it shows it for
It
what
shows
they're
it,
doing
okay.
right now.
Except the word and.
I don't
Can
know if
everybody
you can
see it on the screen,
See that?
what the proposed amendment is?
Yeah, she's got the and after the.
At the end, yeah.
At the end of that sentence. It's there.
The result of the resolution. The result of the resolution would have been the same, because we do the now therefore, the
Just
280,
correcting the
199.
verbiage.
Correct. It's cleaner to clean up what the verbiage is, but the result would have been the same.
Okay, you're welcome.
Didn't print in color.
Any
So you-
questions regarding this amendment?
So you just mean,
Okay, got a motion and a second to amend as put on the screen there. Everybody understands what we're doing?
yep,
Any more comments? Go ahead and vote on the amendment.
she doesn't have that, so it'd have to be a voice vote.
We'll do a voice vote because we don't have it set up in the
Right.
system. Second, yeah.
Got it.
Okay, we have it on our screen now. This is just to vote for the
Amendment.
proposed amendment.
And Joe and Jordan, do you have a vote for the amendment?
Baratka, yes.
Yes, with Jordan.
Thank you both. Hastings, I just need your vote, please. Jason, sorry. And the amendment passes 13 yes, 0 no.
Okay, we have the amended resolution in front of us now. We'll call for a vote on that unless there's more discussion. Go back to the original
Motion.
motion and second, Markstrom and Erickson. Any further discussion? One last time. Hearing none. put it up on your screen. Go ahead and vote.
Brodka, yes.
Spacex, yes.
And resolution amended number 25-25, 2024 transfer into capital improvement fund passes 13 yes, 0 no.
Very good. Thanks for that catch, Mr. Kopish.
Mhm.
Moving on. Resolution number 5. Excuse me. Number 4. Approve transfer to offset budget overages 2024. Whereas per County Board of Supervisors Policy and Procedure Manual, if a dependent department exceeds its approved net budget revenues less expenditures by 10% or greater, or for all general fund accounts, count code 100, any such spending that exceeds the approved net budget by $25,000 or 10% or greater, whichever is less, shall be referred to the board for funding determination upon recommendation of the executive committee. And whereas the unexpected and unbudgeted expenditures of the following departments have occurred, resulting in an overage of the 2024 allowable expenditure budget as stipulated above. We have the overages listed. I'm not going to go through that. You can see them. Now therefore be it resolved by the Price County Board of Supervisors that the transfers made from the general fund to cover the 2024 budget expenditure overage. Fiscal impact, $1,466,635. Money not budgeted. Motion by, was that from the previous one, or do we have Kopish and Drobnik again?
Yeah, it's us again.
Same two again. Motion by Kopish, second by Drobnik. Nick, you want to go through these a little
Sure.
bit?
So you guys just heard the budget or the audit presentation. It doesn't line up with 1.4 million. What this is throughout the year, you guys make decisions and we don't adjust the budget to that. So there are a lot of things that happen throughout the year and they add up. And if you guys have a policy and procedure that says anything over 10% net now that changed, or 25,000 we discussed. So if you look at the county board, per diems were up 6,500 over budget. Again, 2025 we adjust for that. So 24 you have the low, 25 you adjust. Legal notices were up by 4,500. Memberships dues were 4,000. So that's, for example, the county board. Circuit court expenses were over in health insurance by 26,000. So that was, we hired an individual during the year. We had originally had no health insurance on that person. Then we have a health insurance. So we don't change the budget throughout the year. We had 20,000 in court appointed and counsel. Guardian ad litem fees were 11,000 more than normal. Under the administrative office, we added the position of deputy clerk throughout the year. So we used our shared revenue. We didn't adjust for that. You guys approved 2 positions, the shared revenue positions, which was the communications person and the deputy clerk, which we haven't had before. So that was a lot of it. Also, we had professional contract and professional services. You guys approved a job description project where we use a company to go through our job descriptions and update them as they happen. That was something that was approved with a resolution. Health insurance was over by 27,000. Somebody changed in the department. Let's see, tax lister. We had one person leave in 24. We added a new person. We did some extra GIS services, which was to clean up our mapping from year over year. We're still working on that, but that was 13,000. Workers' comp. So sheriff's office, we had quite a bit. Expenses were wages and benefits of 218. Workers' comp was 10,000. Special investigators vehicle approved for 10,000. Maintenance and fuel was 37,000 more than we had budgeted. Again, going into 25, we adjust for these things. So we shouldn't see as much of an overage. Corrections, we had 268,600 in wages and benefits, adjusted in 2025. Our food contract went up $16,000, which we didn't know it was going to happen. Jail medical went up $20,000 in the middle of the year, so that's a contracted service, the medical. Board of Prisoners, we had a full jail during 2024, so we had $36,000 of out of county housing. Traffic safety was over by $199, but that's more than 10%. So,
Mr. Holstrand?
I'm gonna question back on sheriffs and corrections.
sure.
Because we go over every year, we don't automatically increase the budget every year because we don't know what these special
Correct.
circumstances
So-
are coming.
Yep. So 2025, we did increase the budget. I want to say like 150,000 of that 250. We are hoping, which did not happen in 2025, that we wouldn't have major cases. So for example, we'll talk about later, we're over budget in sheriff's department because we've had multiple large cases. So 24 ended with some big ones, 25 started with some big ones, whether it was the body on the side of Highway 13, the missing person in Ogama, the death up in Park Falls, the most recent car accident on Highway 13 and 111. Those add up real quickly. So for example, the one on 111, we're estimating between $50,000 and $100,000 of costs in the investigation and overtime, which is not a budgeted item. Each year we add money, but we don't just go, oh, he spent 250. The sheriff's department spent 250 over. They automatically get 250 and they do it again and did it again.
I guess that was my point, is that hopefully we don't just add every year, we'll add extra $100,000. We
No.
know that these unforeseen things, that's something that we can justify as a budget amendment rather than just.
Yeah,
well,
and that I would say,
let's raise the budget to try
yeah,
and prevent the overage. That's not right.
based on the activities in 2024 going in 25, it was major cases. It wasn't just.
And that's something for us as a board, we can say, oh, well,
Yep.
look what's happened this year.
Yep. That's why it's never been
Here's an extra 100,000. So
a scare
we'll
point.
adjust you by 250,000 again next year.
2024 was also a year where we had very low retention. So wages to train new individuals, to do overtime to cover, that adds up quickly. This year, we're seeing a little bit of the coverage issue in FMLAs, and there's a special name for it, USRA, the military leave. So when people are out on those, we're covering and backfilling with part-time, hopefully not all current employees, because then it's time and a half. Corporation Counsel in 2024, Leanna left. We had about 6 months of a vacancy. So during that time, you have to contract those services out. So that was over by $50,000. We now have full-time corp counsel back. Forestry, that's the biggest one. They were short $409,962 on stumpage compared to budget. But if you'll see it later in our presentation, they're way over normal timing. So they're over $1 million already this year. Any other questions on this resolution? It's a transparency resolution. You guys put it in place so that we have to have this discussion of what went over.
Ms. Stevens?
Does any of the helicopter expense
That-
apply to the county?
Nope. So the medical expenses are on the insurances and the individuals that have that. So if we call a helicopter, if we call a fire truck, that's not necessarily our cost. I guess fire truck's a bad example because we do cover that once in a while based on the location, and there's some stuff there. But the cost is really our staff's time to be investigating. There's cost associated with doing that.
Okay, so we've got a list of the overages and a brief explanation as to why they're over. Any other questions, comments? I think it's good to have this discussion, good checks and balances. Okay, no more discussion. Mr. Hastings, did you have something?
I don't know, what, is this 1.4 million an average number?
No, I think last year it was 6 or 7. It depends on the year.
Million?
What's that?
6 or 7. Oh,
6, yeah, not million. And a lot. This year is the first time we did it that it's a net difference. So in the past, the numbers have been different because we said it's only based on expenses where, so if we did a dams project, it would show dams on here and we would do a $700,000 dams project, but really we got $500,000 in grant money to do that dam project. We weren't able to offset it. You guys changed your procedure policy saying it's now net. So you won't see like a dams on here because we have a revenue to offset the expense. These ones didn't have a revenue in their department to offset it, but some of them were offset by, like I said, the shared revenue. So the board got an extra $500,000 last year. It's not the board, but it's the general fund line item got an extra $500,000. We had some investments that matured that gave us more. So in overall, we didn't have a $1.4 million loss. We had $1.4 million worth of approvals that you guys did that just didn't get offset directly.
Any further discussion? Hearing none, we'll go ahead and vote.
Baratka, yes.
Thank you.
Like Pushy, yes.
Thank you. And resolution 26-25, approved transfer to offset 2024 budget overage, passes 13 yes, 0 no.
What would happen if we didn't approve it?
No, nothing.
Yet to be determined. I think the money's already spent.
Yeah, it's 2 years ago.
Okay, moving on.
Mhm.
Resolution number 5. Amend resolutions 34-24, 2025 Price County Highway Department road construction projects to be financed with short-term debt. Whereas the executive committee has identified the need for financing a portion of the 2025 Highway Department road construction projects to the potential extent of 3.1 million, that is being crossed out and changed to 2.61 million. Now therefore be it resolved that the Price County Board of Supervisors authorize the executive committee to proceed with the implementation of financing 2025 Highway Department road construction projects in an amount not to exceed, again, 3.1 million crossed out, changed to 2.61 million to be financed through the issuance of short-term debt and to include such debt payment in the 2026 Price County budget. Fiscal impact, lined out 3.1 million, changed to 2,640,994. So basically, we're changing the original, or amending the original resolution to what was actually spent. The original, it was not to exceed.
Yeah, so we give highway a credit line that says, you've given us a list of projects that could be up to $3.1 million. You as a board said, we'll allow up to $3.1 million. And then we spend cash. So if you look at our cash balances, they're really low, they're getting lower. This is to replenish that credit line that you extended to highway to do all the projects. So we originally would have just we didn't have to come forward with this because we would have just borrowed 2.61. We put it in the budget. However, we're looking to do something a little different this year in the budget where instead of 3.1, which we would have decided how much you borrow, which would have been 2.61, we did borrow 3.1 the year before. So we don't want the borrowing to go down and then it go back up the next year. So what we're saying is this borrowing for the construction to repay ourselves back is 2.61. Now there's a gap of $400,000. How do you as a board want to allocate that if you want to allocate it to keep our levy at the same level? We've made a suggestion highway has come forward and said, this is what we'd like to do with it. This is something that we've been working on long term, which is yellow equipment. This year, we wouldn't have to increase any levy to start working on yellow equipment because we could use the difference in what wasn't spent in construction. So we're lowering the construction, we're paying ourselves back, saying we still want to borrow the 3.1 because that's what we did the year before. What would we use that difference, which would be yellow equipment? So all this is doing is redoing that original one, go from 3.1 to 2.6, which will match the budget. Again, we wouldn't have to do it. This came out of executive, I think there was some.
Yes.
there was some discussion of, are we being as transparent as we could? Because if we just left it at 3.1, we would adjust it properly in the budget to 2.6 whatever. However, this cleans it up right up front so we could have more of
We're
those
just showing
discussions.
specifically what we're spent on road construction projects. We're borrowing the same amount, but the excess, instead of just
Right now, there's no
spending
excess.
it,
Yeah.
we're going to make it more transparent as to how the excess is being spent
Distributed, yeah,
or distributed.
Where do you see that?
on the next resolution.
Oh,
Okay, motion by Hodek, second by Erickson. Any further comments? Hearing none, we'll go ahead and vote.
Baratka, yes.
Thank you.
Spacek, yes.
Thank you. And amended resolution 34-24 passes 13 yes, 0 no.
Okay, thank you. Resolution number 6. 2026 Price County Highway Department road construction projects to be financed with short-term debt. Whereas the Executive Committee has identified the need for financing a portion of the 2026 Highway Department road construction projects to the potential extent of $3.1 million. Now therefore be it resolved that the Price County Board of Supervisors authorize the Executive Committee to proceed with the implementation of financing 2026 Highway Department road construction projects in an amount not to exceed $3.1 million to be financed through the issuance of short-term debt and to include such debt payment in the 2027 Price County budget. Fiscal impact, $3,137,350. Now, basically, this is just approval to spend up to 3.1 million. And we'll probably amend this once the final numbers come in a year from now.
Yep. So Mr. Hastings, it's actually the next one that has the difference, but
okay, I was gonna
yeah,
say.
yeah, one more over. So this one is what you guys just amended, but it'll be for the 2026 year for 2027's budget. So this has no direct effect on 2020, the budget we'll talk about today. This is giving that line of credit again, saying we as a county believe there's a priority in continuing road construction. The list of projects can go up to 3.1 million, and then we would guarantee borrowing back up to whatever he spends up to 3.1 in 2027. So this is extending that credit line again to say we as a county prioritize and feel comfortable allowing, based on the project list that we've gotten, $3.1 million of construction in 2026 to be paid for in 2027. So we use cash.
Okay, we have a motion by Barkstrom, a second by Erickson. Mr. Kopish.
This question. So this is for the next year. So we're back at the 3.1 instead of the 2.6.
Correct.
Now, the difference between the 3.1 and the 2.6, which we just approved, that's going to be used for something else.
That'll
So is
be
there a
addressed
resolution
on the
coming?
next
Resolution.
resolution.
Okay, there's another one coming.
Yeah.
Oh, okay. all
Yeah.
right.
So this, you're right. So
$490,000.
in
Right.
2024, we were at 3.1. Yep.
Yep.
2025, we were at 3.1, only spent 2.6. 2026, we're saying we want to be back up at 3.1, but we may only borrow 2.8. It'll for 2027,
All right.
for 27.
Okay.
Well, we'll probably borrow the whole 3.1, but when you say only borrow 2.8, that only borrow 2.8 for road construction
Correct.
projects.
Yep.
The balance will be spent on something else.
Well, we got needs.
Correct.
And as long as we're there and we're not really changing the total debt
That's right.
Correct. That's the goal.
from a taxpayer
We're just
standpoint,
doing this to be
utilize it to get
transparent.
stuff done, right? That's what we're doing. Yeah. Okay.
Yep.
Everybody kind of understand this?
It'll all come together when you get all the resolutions and the budget in one spot. It's just you got to do one thing at a time.
Yeah.
Any further discussion?
Is that how it happens in all the other counties? It seems a little unethical instead of going back to the taxpayers.
It's the paper trail that we need.
I don't know what the question is. Going back.
What do you
Is that
feel is
how-
unethical? What do you mean?
Just like the grader, we bought the grader and there was excess money, you budgeted 300,000 and it was 250 or whatever it was. I don't know. I mean, just feel like it should go back in the general fund instead
Well,
of.
in this case, we're not borrowing anything more than we spent because we extended a credit card. They spent it. We owe the credit card. We're not borrowing 3.1 and only paying 2.6. We're saying borrow 2.6, pay the credit card off. We're at 0. So there's nothing to give back to the taxpayer. You could reduce next year's budget by the difference, but we, again,
We never have enough money, it seems like, for highway though.
right, the board has identified needs and that's what we're covering. So instead of continuing to raise it, we're offsetting it by the difference. So we're actually saving, we're increasing less based on the needs that you guys have brought forward.
And we're just showing that on paper.
Yeah,
all
the
that
question
that's
was,
being
is that how
spent.
other counties handle it?
That I don't know.
I would have.
But there's not, other counties do it the same way, right?
Huh.
We're gonna borrow money and spend the money. A good example would be like TJ's project coming up. We're recommending $8.5 million. If he only spends 850,000. 850,000. I added a couple zeros. Sorry. 850. We were using millions here.
IT.
IT does not want 8.5 million. They want 850,000.
Right.
We're assuming that it's going to be right in that range. If it comes in at 800,000, we've already borrowed because that's a project we don't use cash for. We borrowed 850, we spend 800. We then go, like you're saying, to is a general. Okay, there's $50,000 left in this project fund. Do we want to lower our debt somewhere else, which I guess would be giving back to the taxpayer, or do we use it to another project? In the past, we've kind of saved up those little chunks and said, all right, we need a air conditioner. Instead of borrowing money, which again is not raising the taxes, we use that 50,000 from IT, 10,000 from Josh's whatever project, and we add them all up to make another
And-
project.
We'll be talking about this a little more in the next resolution.
Yeah, sure.
Correct me if I'm wrong, but when you say 850,000, it hasn't been approved or spent yet.
No,
These-
this one,
that's
this is the
just
difference.
a-
Yeah.
A want list.
Yep. So there,
Part of
there's,
the want list for that money that's not being used on projects.
yeah, we handle our debt or projects two ways. Highway is one way where we're saying we're giving you a credit line up to 3.1 million. We have cash. We're going to give him as much cash as he needs up to that 3.1. And then we borrow it to pay ourselves back. We put it back in our bank account. The next resolution is the opposite. We borrow all this money and say, go do the projects. And we use the borrowed money to do the projects because we don't have enough cash to do everything and then reimburse. It's also dangerous because if you guys come one day and say, no, we're not borrowing, we're out $3 million cash or 5 million, which would make our audit drop real low. So there's the two ways we're approaching it. The smaller ones we approach the opposite way, which would give us, like you said, so 850,000. Oh, project was only 800. We have to keep that in a segregated fund for debt because the bank and the taxpayer says this is what it was meant for. You guys make a resolution. We have to come back and go, okay, we had these 5 projects. They were all under budget by 5,000, 8,000, 10,000, whatever it was. How would you like to distribute it? We can offset the payment, which is lowering the tax, or we can allocate it to the next project. So we don't have to raise taxes.
Is it possible to use it to those budget overages that we just approved? I mean, it's
No, so
everything we're signing here is debt, debt, debt.
yep. So we will be recommending some of the overage used for debt, but not necessarily. Well, we should probably get to
Let's
that.
cover that
resolution.
on the next discussion.
Yeah.
For now, let's stick with the 3.1 million not to exceed for 2026. Got the motion on the floor. And any further discussion regarding that? Okay, hearing none, we'll go ahead and vote on that.
Baratka, yes.
Thank you.
Spacek, yes.
Yeah.
Thank you very much.
And it just go, you can go. The follow up to your, like, it's all debt. Because this is the time of year we set up all the debt for next year. So we've retired all these debts and now we're reissuing them so that you have a choice as a board.
Resolution number 27-25 for 2026 Price County Highway Department road construction projects passed 13 yes, 0 no.
Okay, moving on, number 7, 2026 Price County capital projects, capital purchase, and court-ordered high-cost placements to be financed with short-term debt. Whereas the following capital projects have been identified by the Price County Executive Committee as listed, you have them in front of you. Now therefore be it resolved that the Price County Board of Supervisors authorizes the Executive Committee to proceed with the implementation of 2026 capital projects and Highway Department road construction in an amount not to exceed $2,980,100 to be financed with short-term debt and to include such debt payment to begin with the 2026 Price County budget. Fiscal impact, $2,160,392 for 2026, and then the following years you have there. So basically this, in my mind, this resolution is to give us a list of what they want to spend the unspent road project funds.
All kinds of stuff on this resolution. So we'll go,
Right, yep.
yeah.
Motion by Workle, second by Kopish. Go ahead, we'll have this.
So we'll just go kind of down the line. And I did bring up, this is our budget packet. So again, going back to your comment about debt, it's because we retired. So everything in red is everything we retired as debt. So we started with 4.96 million and we retired 100,000, 400,000, 700,000, and 3 million. So total, we retired almost $4.2 million in debt. You're reissuing that debt. So our levy was this, we got rid of all that debt, and now you're reissuing that debt to hit those projects. So if you go through the line here, the first one is information technology storage project. This one's a little unique compared to prior years. We've been in a strategic plan of how we do debt, and it's been, we borrow in full, pay off, don't pay interest. We just get it done. We don't pay the banks. We just borrow December, pay off January. And so there's no interest or very little interest costs. There's a fee to get it going, but you don't pay years of interest. So it's been a very good process. However, under the TJ project, it's $850,000. It's much bigger than what our debt levy is, our personal cap, what we've retired. So instead of raising taxes, we're recommending we spread his project out over 5 years. It's a 10-year life of the project, plus we're getting, I believe it's 10 years of service on it. So we won't see an operational cost there. So we're saving, it makes sense to spread that one out. It's unique to what we've been doing. However, it's just what normal counties would do is, cool, this is a 5-year project, we pay the interest. So the first one, in order not to raise the levy of debt and fit it all in, is the 850. The second one is Highway Department Road Maintenance Project. This is the 300 and the 400 that we do every year. This has nothing to do with that 3.1 we just did. This is money we allocated in other departments and took from the highway. So in the past, we used to use levy in the highway to do general construction. Over the years, high cost placements got more, wages over in the sheriff's department or the cost of that stuff. And so we said, let's borrow in this case, $700,000 and take that out of the levy operation of the highway. So they still get their money. They can still do all their projects, and we reallocate it to Health and Human Services, Sheriff's Department, across all departments. So we offset that. We retire those. We get new ones every year. It's just a year in and out.
Just a comment. This had to do with the levy cap issue.
Correct, because we
So-
can't
so
increase the levy.
We
cap.
can only borrow for non-operating, and highway had projects we could borrow for that were operating, and this allowed us to put the money in Health Human Services and stuff where we couldn't borrow.
Correct.
So that's what happened here.
State statute.
And we're still living in that environment, so.
Yep. So the levy caps are still in place. We can't get operating costs, this would be an operating cost. If the operating costs ever went away, if we could increase our levy, the following year, I would recommend 100% to get rid of this debt and increase our levy by $700,000. It would be a zero net change, but we'd never have to pay interest on it. Where now we pay a $1,000 fee or $2,000 fee, it would be a net zero, but that's a dream issue to offset these.
That's something
kind of
that's
fees.
controlled by the state.
Yeah, that's a state issue, not us. Okay, the next section is squad cars. So this, again, we retired. We do pay some interest, yeah. So we retired, if you look at this 400,000, or no, not 400, this 725,000 right here. So multi-projects, we retired that payment of 733,000. So we're recommending the squad cars go in there. A second plow truck. We've been doing a second plow truck. We talked quite a bit about that at Highway, that in order to get back into the rotation of having equipment that's not worn out at the end of its, we're not extending its life as farther than it needs to be. We recommend that 350. So between the two, that covers most of the 733. The next one is where we just made the change on the 2.6 million, 3.1. So we retired 3.1 million. On my spreadsheet here, I only put in 2.6 million. That leaves a gap in what our current levy is compared to our next year's levy for debt. So we're recommending, so Highway gave us a list of equipment that is outside of our equipment fund, and it's outside of like our current extra borrowing, and said, how do we get money to make these items possible here at the Highway? So originally we had said, okay, if we need the 3.1, we'd be raising the debt levy to request these items. In this case, we didn't use enough of the construction dollars. We only used 2.6. So we're saying still take the 3.1, which we've done the year before. So keep the levy the same and use that to start knocking things off the yellow equipment long-term plan. So in 2026, their kind of outlook for 26, 27, 28, they're looking for a loader, skidster, a mower, a truck, which we'd actually move into a different, so the 55, I wouldn't say, and then traffic lights. So that's what this 490 would go towards, is items on this list, this construction equipment type list outside of the normal. So it would keep our levy at the same debt level, and we'd be able to start working on this. Now in 2026, when we do the budget, we won't have 490,000 to do something because we don't know what the construction will be. If Highway uses all $3.1 million in construction, we'll have to come up with another plan to fund yellow or construction equipment. So this year we have an available debt that doesn't increase the cost to the taxpayer. Next year, I don't know what that looks like. We either say no to yellow equipment, or we raise, or we don't do something else, squad cars or something, depending on where you want the levy to stay. Does that make sense on the 490?
So all these numbers here, if we approve this resolution, does that mean they're automatically going to go in the budget for approval then?
Correct. Yep.
But we're not actually spending the money today, but it's letting you, except for some of it that's already approved, like that 700,000 for Highway, that was.
Yeah, that's for next year's money.
But that was approved previous.
No. So if you don't approve
Okay,
the 700,000, we have to go back to Highway and say, you need to do $700,000 less in maintenance stuff.
Okay, in the past, so it's been kind of like an ongoing.
It has been an ongoing one. Yep. All of these in most respects are ongoing, as in we've had a debt levy, we've just put something in it. The new one would be the yellow equipment. And so we're retiring, like I said, 400 some thousand. In the end, our new debt levy would be 5,369,952. So it would go up slightly over the past year. And the going up would really come down to the last borrowing. And that is, we saw in the 2024 audit, the Health and Human Services Department had high cost placements that lowered their fund balance. This year, we're seeing the same issue, right? We budgeted as much as we could for high cost placement. We have a cap on that. The levy, general levy, says you can't increase that for high cost placements. These are mandatory things. Court says you have to do them. So we're recommending under state statute, you can use debt to offset court ordered placements. So we had some debt levy. We had no major issues on the rest of the budget. Our equalized value went up, our mill rate's going down. So it's kind of the perfect storm to say, instead of having a problem 2 years from now, because we keep letting that fund go down, we need to do something today to start to offset those costs. This to me right now is a one-time, we look at it and say, okay, we've stopped the bleeding. Next year, when we look at the budget, how do we get more operational levy into that so we can lower this number? That's where this number is coming. That 400,000 is based on the 2024 audit, the 2025 forecast that high cost placements did not slow down. And so in order to not continue to lose in that department, this would be offsetting it.
Any further discussion?
I do have a question.
Mr. Erickson?
This 2.9 million is borrowed even if we don't spend, let's say TJ only spends 700,000, we still are gonna borrow 2.9 million.
Yeah, because we don't have the cash to front all our projects. We do that with highway. So these projects, we'll put 2.9 million into this its own savings account. And as TJ spends it, as the sheriff spends it, as highway spends it on the plow trucks, we pull out of it, reimburse them. If at the end of TJ's project he was at 800,000, we'll come back to you and say, we have $50,000. How would you like to allocate it? We can either pay down our debt, which would lower the levy in the future. We could use it for a future project so it doesn't increase the levy in the future. A lot of times with IT, he can come up with plenty of issues that we're going to have. So like a new switch for the normal building is $30,000. We'll go to executive and say, hey, can we reallocate some of this borrowing so we don't have to go borrow or find operational money? Can we use this excess, the difference between the project cost and what we borrowed to do something? I would say 85% of our projects come within a couple $1,000s because we know what the project's going to be. We know what the cost. Like TJ's, we have pretty round good numbers.
And then
Hit
a
those.
follow up on that is I don't see the sheriffs. We're talking about towers and
Yep.
that's another year. So that is
Yeah.
this one.
So I've been working with the sheriff's department, Bug Tussle, Northway. We thought this project was going to be $1 million, and that's what they gave us as original quote. And we knew it wasn't going to be part of this budget. We were going to look at it, go a future. This is going to probably be a long-term borrowing. Well, when we had our last meeting, we said, well, where's all the tower equipment? It has nothing to do with Bug Tussle. It's like what we had already seen, what all the dispatch equipment, all the radios, all the car, all the body cameras, all that part. What we didn't have in the bid was when we do get the towers, what goes on the towers and the cost of that. So originally we were at about $1.1 million for just updating the radio system, but that didn't include the tower radio system. So we're looking at $2 million. It's a future project. I've worked with the sheriff. We're in a place where we can manage. We have some runway to get this done and make sure we're doing the right project and borrowing at the right time if we need to borrow. Because we do get money off of the loan. We get $60,000 a year. So we've been saving that up. So that'll reduce the cost. But we're combining two projects there.
Anything else? Mr. Kopish, looks like. you
Yeah,
have a question.
I'm just, as you're talking, I'm looking at the budget and I'm comparing it to this. And a lot of these projects are included here, but not to the same amount. Like you've got 850 for TJ and on here, there's an IT storage project for 195.
That's the
5
payments.
years.
These are the payments.
Yeah, so that 850 is going to get spent, but it's not all here. It may be in future budgets.
No, it'll all get spent in 2025. The 850 will make payments for the next 5 years.
Yeah,
So we don't,
we're gonna,
yes.
yeah, okay, we're gonna owe that,
for
we're gonna
5
owe that
years.
money. So I don't,
You'll-
I'm trying to reconcile what you got here and what we got down here on the debt.
You won't be
Because
able
we're
to.
retiring all the stuff in red. And then
Yep.
we're adding all the stuff down here, like the resolution for the 2.6 we just approved, that's gonna get spent.
These are totals, not payments, though. That's the problem. So you
Yeah,
won't.
but this is what we're gonna put in the levy.
Yep.
Okay.
That's a different, yeah.
And are
But to
these
pay back
payments or
that-
is this debt?
To pay back that 850,000, it's gonna cost 150,000 in first year's budget. That
Right,
It's in
that's what's
effect.
on here. The
194.
payments.
just the first year's
Yeah,
payments.
Yeah, okay. That's
That's the way I understand it anyway.
Okay.
And so that's another thing to think of. So these are the projects we're recommending. You could recommend longer payments and lower the levy. So you could say instead of 5 years, you could do 6 years, which would take that payment from 194 to 154.
Yeah.
You'd
yeah,
pay
so
more
it's-
interest, but you would lower the cost today to the taxpayer to push it on to the next 4 years, 5 years.
And this is a new short-term debt. We haven't done that last
This
year.
is the
So this
payment
is
of all this.
a new 2.9 million.
This
Yeah,
is what adds
yeah,
up.
We retired 2.9 and we're creating
Retired.
2.9.
So
Yes.
we did, but we didn't do it in a resolution last year like this.
Yep, we did 3 resolutions last year.
Okay.
So
Okay.
we've, yes, this is always the same process. This year, the only difference is instead of doing 3 resolutions, we did 1 resolution. So last year you would have seen one resolution for the highway department, one resolution for the IT stuff, one resolution for high cost placements. So you would have seen 3 resolutions instead of 1.
Anything else? Okay, we'll go ahead and vote.
Baratka,
Joe.
yes.
Thank you.
Spacek, yes.
Thank you. And resolution number 28-25, 2026 Price County Capital Projects, passed 13 yes and 0 no.
And it passed 13 yes, so we don't have to worry about it, but it was a borrowing resolution that needs 3/4 of the whole to pass it. But we had enough votes.
Okay, moving on. Number 8, Health and Human Services SNAP resolution. Whereas the federal budget reconciliation package enacted in July of 2025 makes changes to the SNAP food share program that would reduce federal costs and significantly impact county administered services and et cetera. Very long. Bunch of paragraphs here, but I'll go down to the therefore. Now therefore be it resolved that the County Board of Supervisors urges the state of Wisconsin to provide funding to offset the county fiscal impact caused by the enacted federal SNAP changes and to work with counties to ensure adequate resources for the administration of food share and related programs. And be it further resolved that a copy of this resolution be sent to the governor of the state of Wisconsin, Wisconsin state legislators with the constituency within county, the Wisconsin Counties Association, and the Wisconsin County Human Service Association. Okay, my understanding is we're just, this resolution, we're not committing anything or other than saying we'd like the state to step in and provide funds that have been eliminated on the federal side for SNAP.
Yeah, so 2027, we've been monitoring this one, that if the state weren't to step in, there's several $millions of operational costs that would have to be taken on by the consortiums. I don't quote me on exact numbers. When the gentleman was here speaking, it was like $1 million of operational costs for the 12 counties that we serve or we're part of. So we would have approximately 40 based on, if they did it by population, we'd have approximately $40,000 to $50,000 of additional costs that we would have to incur to administer this program. It's based on your error rate. Right now, he was saying we're low 4%, but it would be as a state as a whole that could affect us on our funding. What error rate means is if you're underpaying, overpaying an individual based on an audit. Right now, we have very, very low error rate because we have a lot of good employees working on making sure the stuff is done right.
Okay, we have a motion by Kopish, second by Hodak. Any further discussion? As far as
Yeah.
Go ahead. I'm sorry, I didn't see it.
Still here.
Raise your chair.
I know.
Ms.
So this
Robert.
has nothing to do with the educator yet. This is just
No.
telling them to put all the things back in place, but. Right.
Well, it's 2 different areas. So the educator was one area of the program where they educate you to try to get you understand services and how to get off of them. Like here, you're utilizing them. Once you've utilized them, you can move on. What this is the administration of distribution of the services. So this is the other side. If education goes away, the services are still there. The services never go away for the distribution of these services. Not education, 2 different things.
Mr. Kopish?
Michelle, we approved that other resolution last month
Right.
for the education. The
That we
funding.
did, actually.
That's a separate piece.
This comes from the Health and Human Services Board.
Yeah. The other one came from the
County Board.
Extension Committee.
Right, but not to actually have her still. That was just ours advocating to keep that in place. So we've done nothing to actually keep the program
Correct.
yet,
That is
minus
correct.
begging them
Well,
to
we
do
got
it,
we got to
right?
we got to get funding. That's the problem.
Right,
Otherwise,
but-
the whole SNAP thing's
This is
going away.
different funding though.
Right.
But there's
But the county itself has not taken any action to keep that program in place in our county.
you got it.
Any further discussion? Okay, we'll go ahead and vote.
Maravka, yes.
Thank you.
Paycheck, yes.
Thank you very much. And resolution number 29-25, SNAP resolution has passed 13 yes, 0 no.
Okay, next up, number 9, termination of gravel and marl deposit reservation. Whereas the Price County Highway Department has reviewed a request to relinquish rights of ingress and egress road and highway rights and gravel and marl rights to a property located at Exhibit A and B, Town of Fifield, Price County, Wisconsin, and et cetera. Now therefore be it resolved that the Price County Board of Supervisors does hereby relinquish the gravel and marl rights to the property described above, subject to the receipt of the acreage fee and execution of all of the appropriate documents within 45 days of the passage of this resolution. And be it further resolved that in the case of non-performance by the applicant within the aforementioned 45-day period, this resolution shall become null and void. You should have the description and everything in your packet. One thing that was brought to my attention, this individual, I believe, has 7 40-acre parcels, and that's what originally we thought he was asking for the marl rights to be abandoned. It's just 1 40-acre parcel.
He's still asking for all of them.
Okay. Go ahead. I'll let you explain a little more.
So again, so this came up, that was it 7 or 8? I can't remember. 7 properties, 14,000. So 7 properties were brought forward to remove the marl rights to them. When Register of Deeds looked into the deeds and the titles of these properties, there's actually only 1 property that has the marl rights on it. So we're approving that if there were rights on any of these 8, this individual has the right to pay to remove them, $50 an acre. So in the end, even though it looks like you're approving 7 properties and up to $14,000, when we have the legal description written up by probably Bryce, because he does our property stuff, the title work will only be on the 1 property that has the marl rights, so it'll be $2,000. Their lawyer has requested all the properties to be included just in case during the looking up process. But what we don't want to do is sign a piece of paper that he's released on all 7 of these properties, because then it becomes a clouded title. And what that does is if you go to sell some of those other properties, when they do the title work, they'll say, why is this marl rights released, but I don't see any marl rights on here? And then they go back farther and farther and farther, try to finding it. I learned all this from Register of Deeds. It's considered a clouded title. So when we do the paperwork, it'll come down to only properties that actually have marl rights on it to be released, which we believe is 1.
Go ahead, Mr. Holstrand.
Does the county actually retain the mineral rights there, or the marl rights?
Right now
I mean,
they do, yes.
So we have the rights on this chunk of property to go in there and start a gravel pit.
Yeah.
And then
There's several of them across the county. We did one
really
5 years ago, 7 years ago, where people, when they go to sell it or transfer the property, they want a clean title. And so they'll pay to have this removed. We do a quick overview. Is this property potentially a high producing marl area, marl gravel? And then we get a recommendation from the highway commissioner and the committee saying, we don't believe this will be a gravel pit or something we'd ever use. So we move on. And it's $50 an acre to remove.
My question is, how are we going to define in this resolution, or do we need to, as far as how many acres he's going to have to pay the $50?
It says in there that it's $50 fee. So if it's only 140, it would be, or if say it's 30, because it was 310 or 10 acre, 10 acre, 10 acre, 10, we would just do the acreage that the bill would be for.
Okay.
So you're approving
This
the
language
release.
defines.
Yeah,
defines it that way.
You're approving the release. Our job on the county side would be to work with Register of Deeds, Bryce, and whoever to make sure we're doing the right release and the amount that's owed.
Okay, we have a motion by Erickson and a second by Barkstrom. Any further discussion? Hearing none, we'll go ahead and vote.
Maravka, yes.
Thank you.
Pasek, yes.
Thank you very much. And resolution 30-25, release of gravel and marl rights, did pass 13 yes, 0 no.
Okay, moving on. Resolution number 10, Price County Highway Department 2027 to 2031 Equipment Improvement Program and 2027-2029 Facilities Improvement Program. Whereas per resolutions 814 and 914 adopted by the Price County Board of Supervisors, a non-lapsing committed fund for highway equipment was created and implemented, and et cetera. Now therefore be it resolved that the Price County Board of Supervisors hereby approves the 2027 to 2031 Equipment Improvement Program and the 2027-2029 Facilities Improvement Program. So what we have here in my mind is, and it's included in the packet, is a wish list from Highway. It's what they want to spend money on, and they're looking for our okay to not to spend the money, but to include these as part of the wish list.
Yeah, so you guys in the 2026 budget have the 2026 year that you include in the budget. Those are what we believe will be spent on what our cap is up to for equipment fund. What this list, excuse me, is on both of those is if there's a project coming up and they go, oh, there's a deal on a piece of equipment that's farther down, they can forego something on the 2026 list and bring it from 2028 and buy that instead, with only the committee's approval. It doesn't have to come back to the board to relook at that whole 2026 list. So this is opening up their ability to be more flexible when purchasing, going through their committee.
But we're not spending any money
Oh,
with this resolution.
no.
We're just giving them the opportunity to move things around as needed or as opportunities
Yep.
arise.
It gives the highway committee the opportunity. So anything on 2026, Roger and his crew can go purchase if they have the money and the balance. We work with them on that. If they find a reason like, oh, on the list it had a tar kettle trailer, and they go, no, I need a F-350 instead, they would go to the committee and say, I want to get rid of the tar kettle, bring up the F-350 from 2028 and exchange it. But you as a board, that way we don't have to bring it to the board every time. You're saying as a board, this list of future issues is definitely something we recognize as needs.
Okay, we have a motion by Hodak, second by Polachek. Any further discussion?
How come
Mr. Hastings?
how come the highway department oversees the facilities improvement?
It's their facilities.
Okay.
Yeah, not like this building
Yeah,
or normal building.
gotcha.
It's- Yeah. And that comes, not to get into detail. So they receive money from the state for storage of salt and storage of equipment. So we started putting that away as a facility fund so we can maintain those facilities without borrowing. So we're reducing the cost to the taxpayer by not borrowing for updating the salt shed or updating. I think we did a little shed out at the salt shed to put the loader in one year, or we were going to, I don't know. But that's what that is we created a fund to do those kind of projects at that building or those buildings.
Anything else? Hearing no further discussion, call for a vote.
Maradka, yes.
Thank you.
Pasek, yes.
Thank you. And resolution number 31-25 passes 13 yes, 0 no for the Price County Highway Department improvement planned for equipment and facilities.
Okay, moving on. Next is reports, but unless there's opposition, I think we should take a 5-minute break. It's going to get lengthy too.
That's okay.
Yeah.
Hey.
Hey, we're back.
Hello.
I can hear it.
Yeah, where is that?
That's true. That's true.
In all my years, it's never come up now.
Was that for my benefit?
He heard your battery died.
Okay. Back to the agenda, reports. First report's 2024 Annual Health and Human Services Report. You should have received them via email. And the second one is the 2024 Audited Financial Report. Same with that. You should have received a copy of that via email. They're fairly lengthy, so they weren't put in your packet unless I believe you were not on one of the committees that they were presented at. These are just for our information. We don't have to take any action. Just officially accept them. Anybody have any questions or comments regarding these reports? Okay, moving on. Committee of the Whole. Board Chair Report. This weekend, Sunday, starting Sunday, and it goes till Tuesday, is the WCA convention. It's just the annual get together of all the counties association members. You all were given the opportunity to attend. I don't know who's all going. I know I am. Mr. Kopish, Ms. Hodek. Same as last year, looks like. And Sunday, as board chair, we formally approved resolutions which were submitted, and then they're going to go through the state legislature. Other things have been doing, just keeping abreast of like personnel issues, deputies union negotiations, etc. Been attending as many committee meetings as I can. No major issues or hot button items since the last meeting. Just like this, Jenny left, but as far as public comments, board members shouldn't comment, and it's that way because of we're following Robert's Rules of Order. It has nothing to do with ordinances. This board adopted many years ago to use the format of Robert's Rules of Order. That's why it's not recommended board members comment to public comments. And then just one thing regarding what Jenny said, my views are reflected as how I feel as we had the invocation today. That's all I have. County Administrator Report.
All right, we'll try to kind of get through this quick. The first one is the summary. It should have been in your packet. This is through August 2025. Biggest thing we've been monitoring is Sheriff's Department and the jail. Again, we added additional funds going into 2025, but as you know, I listed off earlier, we've had many larger situations that have caused some overtime, some extra costs. So that's probably the, knock on wood, the only major area that we're monitoring as an overage area. Again, we'll have some here and there, small amounts, whether it's a health insurance, but there was been no, IT didn't lose a whole server and we had to do an emergency 20, 30, 40,000, something like that. Any questions on the general fund? Biggest thing you'll see next month with the general fund is October is a 3 payroll month. So we've caught up on percentages. We'll jump up and then we'll catch back up at the end of the year. Health and Human Services, part of our budget going for 2026. We know we're going to have a high cost placement issues. We were informed at the Health and Human Services meeting that 2 of our high cost placements are going away, but we're not going away, reducing. So they'll go about $10,000 less a month. We'll see in those 2 high cost placements, but they'll still be high cost placements. And then we gained 1 additional high cost placement.
But that 10,000 reduction, it includes
the new one.
The new one.
Yeah. So it's still $100,000 going through the end of the year. So that's helpful. Doesn't mean we won't have more. There's I think there's 20 total placements, but what we consider high cost is when they're outside of a foster. So it would be a extra facility cost. Our goal is to stop them before they get to that point, which there's a lot of programs in between. Other funds, animal control, library, airport, everything seems to be doing okay. Airport, we approved a bill or a project to survey it. We're using some engineering costs that we put in that fund each year to do with that. So you'll see that coming through. Otherwise, highway, their big check will come out when we get the bill for asphalt. Usually it's $1 to $2 million in one check. So if you ever want to see a big check, now it's a direct deposit, I'm assuming, but it used to be a check. Price County cash, this is right now we're at just under $10 million, which is about 1.1 million less than, or 1.8 million less than last year. This is again, highway projects coming sooner, other projects. So you'll see based on all the things we just, excuse me, did today, in December, we pop back up about $5 million. So we're using our own cash and then we repay ourselves. Price County sales tax, we got the numbers for the next 2 years. They're predicting 2.5% increase year over year. We should have no issue hitting our budgeted amount unless there's some crazy stop payments in the area. One thing people get really confused about this is they see or hear people having the ability to buy less things, but that doesn't mean they're not spending the same amount or more money because of the cost of things. So it's based on the amount of money spent, not the amount of widgets people can buy. So in general, you don't see sales tax go down unless there's a huge layoffs and nobody getting income to be able to spend. So spending stays the same, number of widgets that can go into a household goes down, which then equates to the same amount of sales tax. Price County stumpage, we're at just over $1 million, excuse me, $1 million, which is $480,000 more this time last year. We believe we'll hit the budget, plus we'll make up most of what the shortage was for 2024. High cost placements, we're at $400,000 through July. It's usually about 2 months behind. Last year at this time, we were only at $240,000. So we're $159,000 more than last year. Like we discussed, we have some high cost placements that were still out there. Billing's about 2 months behind, so you won't see that slow down until October, November. High cost placements, AODA. This one we offset those other high cost placements. We're only at 208,000 so far this year. Last year we were at 377. Any questions about where we're at in 2025?
Okay, we'll move on then. Budget update for 2026.
All right. So based on all the resolutions today, everything in your packet should be as close to up to date as we can get. The first page, again, we start with the levied amount, the operational levy, which is $7,778,807. Executive recommended taking the net new construction of $94,511. That's new buildings, so we're redistributing the taxes to go up zero at that point. So our new base levy would be $7,875,491. We went through where it says wages. That's still from when we approved the new wage schedule a year ago. It's finally all implemented. So it's not a general increase. It's catching up from the decision we made a year and a half ago or during 2024. So it's now complete. So that's all in there. Adjustments, So this next section, there's a whole set of pages that come with it to show you what the ups and downs were, but it ended up equaling about $107,316 in recommended reductions in expenses or increases in revenues. So that we have a balanced operational budget is what we've presented. The debt service, we talked about this earlier, where you reduce a bunch. So most of this came up in the break. Most of our debts are 1 year or 1 year borrowing, short-term borrowing. So we borrow in December, pay back by March. So we have 3 months in our payback window. Those are the ones that we replace. This year was unique. We did only one of those. Well, two of those debts on that resolution are what would be short term, but they're longer term to us. As in the 850 goes out 5 years, it's still considered short term debt. And then the 300, which we redo every year. So we have $100,000 payment, but it's reducing. Then we add, so a total of $5.3 million in debt service.
And that 300, that was voted on previous
Yeah.
administration.
Yeah. And that's just,
We retire one. It's like there's 3 different ones. We retire one, but then we add a new one. So
yeah,
they're always ongoing.
it's one of those that we could think about strapping everybody in the future with, but it just continues. It's their maintenance that we offset something in the operational.
Brian, I got
Oh, Mr. Hastings.
all of our short-term debt stuff. Is that interest rate for all that stuff across the board? Would it make sense to change some of our loans to long-term debt? I'm just curious.
So with the short term, you're paying almost no interest. So by stretching it out to 3 or 4 years, you'd be paying, I think it's 4.5 this year. So 4.5% on 500,000. Now you're putting a $20,000 extra payment on the taxpayer for 4 years. So that's why we've done it. You save about $40,000 to $60,000 a loan that we're
That's
not
good,
getting
yeah.
anything. That's why we've transitioned to that short term.
Sure. Yeah.
There are very differing schools of thought of that. Is why am I as a taxpayer paying for that project today and I might move away and never use it? Where if I borrow for 10 years to do a park, I would be able to live here and I'm paying for it at the time I'm using it for the 10 years. Same with roads, however you want to look at it. It's a horse apiece how you want to look at it. It's
Yeah, you knew
cheaper.
the numbers. I was just curious of what your opinion was on that. So
Yeah, it's cheaper to not
Yeah.
do loans.
Usually, yes.
There is some ability. So there is one scenario. So if we borrowed $500,000 at 4.5%, right now we're getting 4% in our interest. Technically that loan is only at 0.5% until you spend it. So you could arbitrage almost by just keeping that loan for 5 years of cash sitting there and you pay nothing on it. But that is what corporates do. Corporate businesses can do. We could do it. It's not recommended.
It's not legal.
No, as long as it's under the arbitrage level, which is break even.
Okay.
Anyways, I would not
I
recommend
was
it.
thinking the same as you.
Yeah. Arbitrage is illegal. That means you have to spend. So if we took out a $20 million loan to do a big project, other counties are falling in this and you're getting say 5% on that loan, but your interest rate's only 3%. It's 365 days to spend 50% of it. 16 months, you have to spend 75%. I believe within 3 years, you have to spend 100%. Otherwise, it's considered arbitrage, and then you pay back the federal government. Hold it. We don't have that issue. Next page was bridge and culvert aid. We have a whole bunch of bridge and culvert aids, but we had an overpayment or over collection for the town of Worcester based on what they gave us the numbers, considering the final bill of $73,127. So next year, so last year we collected 71,000 too much. This year we'll be collecting 94,000, but really we only need to collect 21,000 because we used that last year's money to pay that whole. Library, where's library? Library is 318,742. That's outside the general levy. Overall, the total recommended levy will be $13,585,508, which is $193,173 increase or 1.44%. The increase comes through our debt, which is 3.04. And that comes with the debt payments, and that's mostly the high cost placement. That would be the high cost placement, about half of that debt. Equalized value went up by 9.98%. If you compare last month's report to this month's report, the mill rate, I think in the last one was down 70 some cents. What happened was the 2025 number was off, so we adjusted that. We're still going down 46 cents, not 70 cents, because that was 2 years. Over 2 years, we went down 77, but 1 year over 1 year, it's 46 cents or 7.77%. So if nothing changed in all the settings, your mill rate would go down 46 cents. That
Question.
Focus.
Yeah, Nick, going back to the prior page
Yep.
with the debt,
Yep.
with the pending resolutions, you got high cost placements in there. Apparently that's now allowed
That was what you
because
guys.
that's why we started moving money around years ago, is because of that issue.
Well, it's always been allowed. There's 4 exceptions, or I think it shows 4 exceptions, but there's only 3 in the state statute. One exception is any insurances. So if you could borrow for your workers' comp, your property, which
Okay.
again, future issues we may have to deal with. You can borrow for debt, and then you can borrow for court-ordered placements, which are considered high-cost placements.
Okay.
We've just never utilized it. We've always taken it was easier to go get borrowing for highway than it was to go get borrowing for high-cost.
So we
placements.
could have borrowed for it.
Yeah.
Okay.
Across the state, I will say there's about in the north, about 3 of us doing it. They'll say it's harder to borrow for that than it is to highway, just based on trying to
Now,
discuss it.
I remember when we had a negative fund balance in Health Human Services,
Yep.
and now it's positive.
Mostly due to the health department. Yeah.
Yeah, and are these the right numbers on this page? As these fund balance numbers?
1.2, yeah.
One
Is that what it is?
1.505?
Yeah, 5, but it went down 400
Went
year over
down, yeah,
year.
but,
Yeah.
so we're borrowing and we've got the fund balance. Do we need to be borrowing, or should we just use the fund balance to take care of some of this stuff? And
We're borrowing because I see a trend where, like, 2024, we were short 500,000. 2025, we're going to be short a couple 100,000. What we don't want to do is, you were around for the airport where we said, oh, we got a really healthy balance there. Let's under budget them, which is essentially what high cost placement we're under budgeting. And then we forget about it. Now, would we forget about a high cost placement? No, but what happened there is we couldn't right the ship fast enough and we went negative. So what my strategy recommendation would be is, okay, you borrow now, and next year when you look at the budget, you try to offset that with other operational in that high cost placement, so you're not borrowing as much and you're trying to maintain. The goal would probably be about $1 million fund balance. If we don't start now, I don't know how we can right the ship overnight without major changes.
but this is a part of the total. Now, we got a $6.6 million overall fund balance, and
Undesignated.
Yeah.
Designated,
So we have,
assigned.
this is a budget issue, taxpayer issue, because
No, it's
we're
cash
making a
versus,
decision to
yeah.
borrow in areas where we could let these overages, like the sheriff's department, just reduce the fund balance.
Yep.
And we saw that we're in good shape with the fund balance. So you got to weigh this thing, do you borrow and go that route, or do you just let some of these negatives flow through and bring your fund balance down a little bit? That should be a conscious decision. And I'm not arguing with Nick on what he's doing. It's just that I think from a board perspective, you got to look at that regarding the taxpayers on what you want to do. It's a very good financial condition. You don't want to get yourself in a hole like Ashland was a few years ago. And, I mean, they
And
were in a
borrow
mess.
that.
And so I subscribe to where we are, but that is a decision we have to consciously make.
Yeah,
And we are making that decision by approving this budget. We're borrowing for high cost placements. You could
have
let
to
the
keep
fund
it
balance
balanced.
take care
I
of that.
mean,
We
there's-
could probably get by with no tax levy. Oh, what's wrong?
no, I'm just saying we have to keep it balanced.
Yeah,
I
But
mean, you
I-
got to look at the whole picture.
you know where I'm coming from.
I'm just commenting, and I agree.
Yeah. You gotta look at the whole picture and decide and be a conscious decision on what we're doing with these taxes.
Yeah, we talked about that, is do you start eating away at that balance? And I think we probably will long term, because over 2 years, it may be 900,000. We're only replacing $500,000. The problem is we do have to start making conscious decisions now for 2 years down the line to adjust so we don't have to continue borrowing or borrow. Like you said, Ashland gets into a problem where all of a sudden all their fund balances are below or not there, and then they had to make big borrowing decisions. That's a spike we're trying to mitigate. So our mitigation's 1%, 1.5% of the whole, rather than in 3 years go, oh my gosh, we got to go up by 10% because we don't.
Well,
know
that's
we're
what you
doing.
want to avoid.
That's what,
agree-
yes,
I agree
that's
with
what
that.
our goal is.
I agree with that.
Yep.
So enough said.
I'll second.
Yeah.
That's
well,
what
we
we're
just have-
working through is that.
As a board, we just have to be cognizant of that.
Part of the packet, we included all the ups and downs. So you'll see where health insurances are, wages are, things that go in and out small through each department, what we made the adjustments. The next page is the long, tall one, or one of the pages. That just shows each department what has gone up or down, decrease, increase is the final column on the right to total that $193,000 increase. Net new construction, that's where we get that $94,000 allowable increase because our net new construction went up 1.2%, which is one of the highest we've had in my tenure. So a lot of new, you're seeing the Dollar Generals, the Quick Trips, any bigger buildings bumps that up real quick. But in general, we're I shouldn't say way, we're below the state average by quite a bit. The next page, Appendix B, is nonprofits that we partner with through services. So we as a county cannot contribute to just a nonprofit, say, here's cash, congratulations. All of these have a partnership. So like Friends of Fred Smith, we have a contract for them to deal with the statues. Historical Society, they maintain long-term records for us. ITBEC is a Northwest Regional Tourism Group. Brian,
Brian, I got a question.
Go ahead, Mr. Reed.
This is a good time to ask. Is it possible to give in the form of a donation? No, we'd have to partner with somebody if
services provided. Yep.
Is that a state statute or?
Yep, it's Attorney General opinion and statutorily the way they're reading it is you can't just give a donation. So where the areas people were getting in trouble with is food pantries. So they know this supports your community. They wanted to be part of it. They'd say, here's $10,000 to the food pantry, help people. You can't just give a donation. You have to say, you're providing a service that we're not based on something we're required to be doing. So like our statutes, we need them to be maintained in order to maintain that park. We've agreed with the Kohler Foundation to make sure those statutes maintain. That's how we got the park. So it's not a donation. It's working with a nonprofit to maintain those statues. Same with like the tourism, Phillips Area Chamber of Commerce. We use them to promote the woods, waters, and natural resources of Price County because we don't have a tourism department. This one, I don't remember who was asking me about. This is our Appendix C is how we lay out our debt, what goes away and what comes each year for payments. So we pay interest like this is the purple is what we just approved, what'll be the estimated cost right now. So you can see like we're making payments for the next 5 years under that one. This highway one, that's the 300. If you look up, we retire one of those each year. So that's how they go away. And then in the bottom is what future recommendations we have, the green. Capital project funding sources. So again, in the budget, we provide, we're asked by departments, they recommend a whole bunch of projects. We start to help sort them out. We work with the departments, we work with the executive. We know we have the T-hanger project you guys approved. That would come out of that capital improvement fund, which has about $1 million in it right now. The electrical panel, when we finally get those quotes, we'll recommend it comes out of the capital improvement fund. You guys could say no, and we would have to go some other way to do that, but.
I thought the T-hanger project was only gonna cost us $160,000.
At the end, yep. So we have to pay, was it 1 million out of pocket up front, and then they reimburse us the first year 600, and then 2 years after that 300, or yeah.
We need to use it later, but coming out of our fund will be this much.
Yeah. Capital improvement projects levy. So that's each year we have a little bit of money in the levy to do operational projects that wouldn't fall under borrowing money yet. So we do update drop ceilings, flooring, furniture. MDCs are computers in the sheriff's squad cars. So they're like heavy duty if you drop them or beat them up. Ballistic shields would fit in there this year. Fingerprint scanner, I believe that's up in the jail it would go. But we take that, again, a list of stuff and try to fit it within our budget. Then we also kind of look at future years. Capital borrowing, that's what, again, the borrowing, the debt projects. So triaxle, squad car, 3 squad cars, and the IT project.
So these are only, this money's only going to get spent if we approve this budget.
Correct, yep. So far, none of these are, well, I shouldn't say it.
So,
T
so
hangers.
this list
in
can
there.
be changed.
Yeah, the T.
And we should, but it's
It's discussable. Yeah. So like the T hangers, you couldn't change that. You guys approved that.
committed.
Electrical panel, we just put it on there because we know it's a high priority thing, but we don't recommend borrowing and we don't recommend using cash. So the electrical panel is not approved, but this is where we're suggesting it goes. That has to be a special resolution because it comes out of the capital improvement fund. This is the list of projects that are forthcoming. So we make sure departments keep us in the loop with all their future issues or projects. And then we fit them in as we can, or we, work with them knowing like a 2017 Ford F-150 with, has 60,000 miles. We're going to have to replace that, or we would look at replacing that in the next couple of years. Big Falls pit toilets. There was a question on, Tim's Hill. There's usually the pit toilets and Tim's Hill, our goal is to get 50% paid through the DNR or grant funds. We've already looked into it. The grant funds will most likely not cover the Tim's Hill road and ditch culvert, and then the shelter, just because it won't score high. So it's one of those that we have to decide, are we going to pay 100% or keep pushing it off until it does score higher, which the likelihood is low.
What is it? Score based on usage?
Yeah, usage. A lot of times if it's adding additional access, if it's adding a UTV or ATV trail or boat ramp or additional activities, it scores higher than just you're updating your roof on that project. Body scanner has been on the list for a while, those kind of things. Library services, we always include this so you see where the number comes from. 318 this year, last year was 309. Equalized value, this is a number we get from the state. This is how we distribute the total taxes to each municipality before it gets distributed to each household. So if you look at it, we had a chart earlier this last time where it shows who's going to pay more, who's going to pay less, whether or not you increase your levy. So if we did a 0% levy increase, there are taxes going to change because the town of Worcester went down 0.75, I believe. Park Falls went down like 1%. So they would pay 1% of the total less of the total year over year. So if we did nothing with taxes, their taxes are going down. What we collect from that municipality. We do a nice chart here that just shows who pays the biggest portion of pies. If you look year over year, that's where you'll see the percentage difference. Total revenues is $33,202,664. This will change slightly. We did get some shared revenue numbers. The debt total, like when we actually bid out the debt, those always change a couple bucks. 2026 expenditures equals 33,202,000. So we have a balanced budget. It shows where that money goes. So these are non-biased numbers, as in we don't show like, is it grant money? Is it levy money? Is it whatever? This just shows if you look at your total expenditures, Health and Human Services 23%, highways 26.75%, debt is 15.77%. Now highways 13% of that debt. And then general debt was 1.96. So really highway, you can look at it as 39% of our total budget. Public safety is 13.4%. I saw a really interesting report on public safety versus health and human services, and they compared counties, the more you spent on health and human services, the less you spent on health or public services, because you tend to help out individuals before they need the being arrested or, you know, in the run-ins with the law. Then you see counties that spend a whole bunch on law enforcement and then very little on health and human services. So they correlate quite a bit to each other. I thought it was an interesting presentation. Where does my money go, or your money go? So Price County Property Tax Levy 2025. This has been updated. So for every $100,000 your home value is. So if you're valued at 200,000, you'd pay twice the 45.25. So for every 100,000, you pay 45.25 per month towards taxes, or for the county, $543. So if I have a $100,000 value, I pay $543, and it gets distributed to the following areas. So like public safety is $14 of that. Transportation's $18. So that's your plowing, your new roads. Airports, 58 cents. Veteran service, 35 cents. General government, which is your legal services, boards and commissions, all that, we're actually a negative levy. So we bring in more money than we cost the county. Conservation and development, 1.9 or negative $1.92. And that's with like your, a lot of your grants come through that. So anything with snowmobiles, stumpage is the big one in that area. Health and Human Services, $9.73. Equalized value versus property tax versus mill rate. Again, our mill rate has gone down quite a bit since 2018, and it continues to go down. Property taxes continue to go up. Total collected, I should say. Equalized value has, since 2018, doubled. So we went from $1.3 billion to $2.5 billion, and that's a state number. That's why you're seeing a lot of new assessments, because the equalized value and assessments need to be within 10% of each other. But if everybody gets equalized or assessed and everybody goes up 50% in a municipality, it gets closer to this number, but your taxes shouldn't have changed because your mill rate would be halved. Any questions or any additional information you want to see in a future budget? This is, again, just this is where we're at. Next meeting, you'll have to make a motion to recommend a levy to the public hearing.
So I guess look it over, and if there's anything you would like to see changed, bring it up next time. Is that a correct statement?
Yep. Or bring it, tell executive, because they'll
Yeah.
be looking at it again.
Let somebody know. Mr. Steven? Yes. Sorry it's taking so long, but
Big meeting.
okay. If there's nothing else for the administrator, we'll move on to committee chair reports. Administration, Mr. Warco.
Yes, at our last meeting, we got our monthly report on the terminations, resignations, and retirements and new hires. I guess the one thing that stood out in the report is retention is starting to stabilize and be pretty good. So let's hope that trend
Yeah,
continues.
that's a good thing.
Yeah. We worked on the employee handbook. Some of the things that we've been talking about is cell phone policy, meal reimbursement, grievance procedure, and acceptance of gifts. The committee wanted more information on different subjects, so Nick is getting that ready for the next meeting. We got an update on tailored family health. And we started the process with the deputies union for contracts. Proposals have been exchanged. We'll actually start the physical negotiations at our next meeting on October the 15th. That's all I have.
Okay, any questions for Mr. Warco? Comments? Okay, we'll move on. Next up is executive. That'd be me. We had our last meeting last Thursday. We had the treasurer's report. All is in order for the REM sales. That's going to start the online auction on September 24th. There are 14 listings. There's 18 properties, but a few have been combined to make one. Discuss the resolution regarding Catawba wishing to purchase property that was listed before the auction, and that was approval was given. Had a report from the Register of Deeds. She talked about getting parcel IDs on property documents consistently. There'll be further discussion regarding that. We had the budget discussion, which was basically presented today here. Discussed the resolutions that were forwarded to the full board today. And we're still working on finalizing the district makeup for the annexation of Phillips, city of Phillips property into the town of Worcester. It affects population of 3, but it's still got to be officially. Is it okay? I'm sorry, town of Elk. Yep, I misspoke. Anyway, we're just trying to dot our I's and cross our T's when it comes to that. That's all I have. Any questions? Okay, move on. Executive, Mr. Hallstrand.
Parks, you mean? So we didn't.
Oh, I'm sorry.
We didn't have a forestry and parks and buildings and grounds meeting in September, but Joe did say we've got 4 active sales right now. The Solberg Park is moving along really good. They're starting work on the pump house today. They got all the electrical panels set. He also said that we just received a $47,000 grant for graveling roads out in the Musser section of the county land. So these grants that we approve and apply for a year ahead of time, sometimes it takes them that long to get here. So we got it. We'll be doing it. That's really all I have.
Any questions for Mr. Hallstrand regarding forestry, parks, and buildings and grounds? Okay, we'll move on. Health and Human Services, Ms. Hodak.
Okay, thank you. September 10th, last Wednesday, Health and Human Services met. We had Peter Daly came into public comment, and he, from the town of Elk, he was a board member for the Health and Human Services Board, and he publicly commented that he was appreciative to have served on the Price County Health and Human Services Board and to have served the public health in Price County for 40 years. We appreciated his service. The annual report was, as you already said, okay, it's been accepted and it's on file. It's always a good read if you ever want a copy and read through, because they do have some statistics and some good graphics in there too. So you ever have a reason for some possible light reading, ask for a copy of that or go online and read that. We had aging and disability. Let me see. So the BART bus is, the purchase prices are nearly doubled, and something is going on with the company supplying electric BART buses. So they've been hard to contact. From what that was reported, part of the issue is the short supply of parts and meeting federal guidelines for the buses. $1,200 has been requested for the BART program from Park Falls and Phillips, and requests have been made in surrounding townships at a reduced rate. Oh, this is all I have here, 12,500. Okay, it doesn't say that here. You might want to make that change.
I'll amend that. I missed.
Okay. Okay, thank you for that update there. I thought that didn't sound right. The next meeting is, let me see, it's in the Council on Aging. There will be a fall nutrition staff day on October 1st, so all the nutrition sites will be closed, so they can all attend, the workers can be there. The Senior Living Expo is October 14th. The Fall Color Ride will be held on October 16th. I'm a little concerned there won't be too many fall colors by that time, but you never know. And they're using the BART bus that holds up to 28.
There goes Connor.
I'm going to say 28.
Yeah, they got a big bus. That's all.
Yeah, it's a big bus. I did not know that there was one like that. So I have signed up with some friends and we're going to take that ride. So I'll let you know how the BART bus feels on those. Veterans needing rides to the VA hospital now can go through the Veterans Office. They've acquired a DAV van to transport to Iron Mountain VA Hospital. And veterans attending other locations may be able to coordinate with the Veterans Office. They do need to have volunteer drivers, so if you have time on your hands and are willing to do that, you do not have to be a veteran to do that. There were reports about the ADRC governing board, just approved the budget with a slight increase for ADRC. Woodland Enhanced Health Services Commission, we all go online, both Dawn Griesel and I and Sarah Soha. We were just talking about all kinds of budgetary things. Let me see, 2 placements in Clark County and blah, blah, blah. You can read that if you want to go through that. Child and youth report was presented, is on file. We talked about SNAP resolution. And, you brought that up, Mr. Polachek. I will make sure that we check. Mr. Polachek thought we were supposed to have Wendy Rebney here to speak to the board. So do you remember that, Nick, or not? Yep. Okay, so I'm not doubting it. I'm just, I made a note here, so we will see what we can do for that. Okay, thank you for bringing that up. Yep, no problem. Nick reported about the high placement costs leaving, or not really leaving, just kind of there, saving our estimated $10,000 a month. But we do have a new high placement, one high placement joining the children and youth. Director's report, the WEEP program qualifications pamphlet was presented. It is on file. There is a reported 10% increase in mental health daily costs at the Mendota Mental Health Institute facility. Active shooter training is scheduled for the normal building on September 4th with the Price County Sheriff's Department. The program will then take place in October in the county courthouse. October 4th, Harvest Fest Public Health and Wellness will set up physical activities for the children at Elk Lake Park. So if you're attending the facilities, the activities that are going on through Phillips at that time, and you have some youngsters here, take them on down to the Elk Lake Park. They'll have some fun activities. And the next meeting date will be October 8th, 2025. Thank you. Any questions?
Mr. Hastings, go ahead.
Yes.
Did that opioid committee have any meetings yet no?
I don't know if they were, you have them all together yet? No. Okay, so we're not there yet.
Just curious of where that's at.
There was no discussion about that, so, okay.
I'm on a board called His House of Hope. That's in a men's addiction ministry at the south end of town here. I just wondered if that'd be something that would be beneficial for us to spend a little money on. I'm curious of what the partnership looks like. So is that the proper committee to address, or is it?
I would assume.
Once we get that together, we'll start talking to.
Yeah, they're still
what the
new in
process.
everything yet too. They've only been open a year, so they're still
Oh, nice.
figuring stuff out. So
Nice, okay. Any other?
Just one quick question. Has Bart discussed anything about replacing the electric bus order with the internal combustion engine buses?
they
Because
keep
the buses they
buying them.
have are
Yeah.
high mileage, and are they going to die before they get new ones?
No, they're continuing to buy the ICE vehicles, so that their new rotation down here. So like the Monaco bus just hit, it was like 300,000 or 400,000 miles. They spent 15 grand and redo the internals, like the transmission and whatever. They rebuild something, and it's much cheaper because the body of the vehicles are still good and the chassis. So they're managing, they're
We're
rotating
okay.
their
I
buses.
mean, they'll be okay for now.
Yep.
I know that was a question when that first vote came through, Mr. Ernst, and I know when we travel throughout the state and everything, I'm always concerned too, thinking, you get up in those northern regions where there's just a lot of remote, and what happens when something dies?
Yeah.
Meaning vehicles. So, all right, no other questions? Thank you.
You. Highway and Transportation, Mr. Polachek.
Thank you. The highway crew has paved 900 tons of mix on County Trunk N, spray patching on County Trunk D, F, and H, crack-filled 15 miles on County W, crack-filled bridge approaches and manhole covers, crack filled 2 days on State Highway 13 north of Ogama. Grading on County Trunk D, RR, C, and M projects twice per week. Boom mowing on State Highway 86, ditching on County Trunk D. Changed 2 deep culverts on County Trunk D, shouldered a half-mile for the town of Elk, shouldered the new Solberg Lake Park, installed ATV signs on State Highway 13 in Phillips, so now the bridge is open for ATV, UTV traffic. Changed the culvert for the town of Knox. In the shop, RFPs are being prepared this month for 2-ton truck chassis with plow and body package purchased and installation. RFPs for winter blade order will be sent out this month in anticipation for the upcoming winter. 2-ton truck chassis, 2 truck chassis are at Universal Truck awaiting the body and plow builds. Delivery expected late in 2025. Mechanics have been repairing and maintaining equipment as needed. On the airport side, the Hamburger Social brought in 22 airplanes. Badger Pilot had 7 planes attending. Ditch cleaning, mowing, and pappies are up and going. The dams, Musser Flowage, 5-foot drawdown to begin September 2nd and be completed by September 15th. Phillips Chain, Long Lake, Wilson Lake, Elk Lake, Duroy Lake will be drawn down 8 to 10 inches beginning September 29th and completed by October 1st. Solberg Lake and Sailor Creek flowage will be drawn down 6 inches beginning October 29th and completed by beginning September 29th and completed on October 1st. Our next meeting date is October 28th. This will be our fall road tour meeting. It will start at 7 a.m. at the highway shop. Anyone that wants to attend, and I urge everybody to attend, please call the highway office and let them know so that we can figure out how big a bus we need to transport everyone. We can guarantee it'll be well worth the price of admission. October 28th. Are there any questions?
Clerk has something.
I just wanted to tell you that Roger did reach out to me, and I'll send out an email invitation to everyone as a reminder and the date and time.
Okay.
Okay.
Thanks, Meredith.
You're welcome.
Thank you.
Okay, thank you, Larry. Next up, land use and UW extension. Mr. Barkstrom.
Okay, there was a regular scheduled meeting on August 21 and that was canceled. But we did have a short meeting just before the last full county board meeting where we approved 4 amended ordinances that were submitted to that full county board on August 19th. They were all approved. Our next meeting is a couple days from now, August or September 18th. I did attend the Park Falls Area Community Development Corporation, if you wanted a short summary of what went on there.
Sure.
There was a proposed development of a 60-unit rental in the Park Falls area. It was known as the Pines at Park Falls. That has a setback. The developer is withdrawn, so there's no site prep has ever been started, so they're kind of down to square one again. The YMCA is up and running. The daycare is struggling. They should have been open in July, but they're not, and they're struggling with staff and facilities approval. One positive note: the Chequamegon School District reports a positive enrollment population. They thought they were going to be down 40 students, but that didn't happen. So their population is 658, and that's all I would have.
They had a bunch from Phillips go up there.
I'm sorry, what?
They had a bunch from Phillips go up there.
I heard 18.
How about that?
Anything else for Mr. Barkstrom?
There.
Okay, move on to law enforcement. Mr. Polachek.
Our meeting in September was canceled. Do you have anything, Nick? Things are rocking and rolling over there.
Okay,
Thank you.
thank you. That concludes our committee of the whole, so we'll convene out of that. Date of the next meeting is October 14th, 9 o'clock in the morning in this location. There's nothing else. I hereby adjourn.